Good evening, everyone. Am I audible? Good evening, everyone. Am I audible? Perfect. Let us do one thing. Let us wait for 5 more minutes for everyone to join in, and then we shall start with our session. Okay? Chalo. I guess we are good to go. How is everyone doing? Okay, Animesh is saying, welcome back, Animesh. Okay, Samruddhi is also saying good. Parita is saying going well. Uh, ठीक है चलो. I will quickly share my Shweza with you. Okay, we're gonna have I've made sure that all the important concepts are going to be covered, okay, in this session. I'll be sharing the Schwezer notes. I'll be explaining key concepts. So, and in between, if you have any questions, please raise those questions so that I can address it and then we move forward. Am I clear? Give me a yes in the chat box. Okay. So the first reading, that is fixed income instrument features. The first reading. What we're gonna first do is we're gonna understand what is this subject about. Okay. Let me just increase the font size. Okay. Fixed income securities. Fixed income securities. We're gonna divide this word into two parts. Okay. First part is securities. Securities that are traded in the market. They are listed on an exchange. They are traded on the market. Okay. Now, which securities are we talking about? We are talking about securities out of which you get a fixed income. Am I clear, guys? Out of which securities, out of which you get a fixed income. Is that clear? Kashish, the concepts of duration and convexity, I will try, if possible, I'll try to cover it today. If not possible, we will require one more lecture for that. Okay, Kashish? Now, fixed income securities, guys, it is very, 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 very easy. Okay. You only need to, whenever in your CFA curriculum, whenever we are talking about fixed income securities, you only need to understand, or I would say you only need to define five things. You need to define five things. The first thing is, the first thing you need to define is what is the principal amount? What is the principal amount? Which is also known as face value, which is also known as face value. Is that clear? Is that clear, guys? Now, the next thing that you need to define is, okay, whenever we are giving a loan to the company, whenever we are giving a loan to the company, okay, the company will be paying us interest on that. The company will be paying us interest on that. Okay. So how do you calculate, or how do you know how much is going to be the interest amount? How will we know कि if I have given a loan of 1 crore to, let's just say, Reliance, how much interest am I going to get on that? For that, you need to know what is the coupon rate. What is the coupon rate? Is that clear? Everyone is clear with what do you mean by a coupon rate? The third thing is how long is this loan going to last for? How long is this security going to last for? Is it for 5 years? Is it for 7 years? Is it for 10 years? How will we know that? We will know by the term which is known as maturity. Which is known as maturity. Everyone clear with what is maturity? Okay. The fourth thing that we need to define is, okay, the fourth thing that you need to define is how much am I going to pay for the security? Okay. How much am I going to pay for the security? As an investor, if I want to buy a bond of Reliance, what is the price that I am willing to pay for the security? Okay. So we need to know the price of the bond. We need to know the price. Is the fourth thing clear, guys? We need to know the price of the bond. And the last thing is, okay, you guys will tell me, sir, how will we know the price? How will we know the price? How do we know what is the price that we should pay for a specific bond? Uh, okay, that is where the fifth thing comes in, known as yield to maturity. It is known as yield to maturity. Just give me a second, guys. Okay, guys. So now, like I said, whenever we are talking about in your exams, whenever you have any question based on fixed income securities, it is very important. It is very important to define these five things. It is very important to define these five things. Okay. First is, what is the principal amount? Second is, what is the coupon rate? Third is, what is the maturity? Fourth is, what price am I willing to pay? What price am I willing to pay? Okay. And fifth is, how do we find the price of the bond? It can only be done through yield to maturity. It can only be done through yield to maturity. Let me share my Schwezer notes. Just give me a second. Okay. So we have defined, we have defined what do we mean by principal amount? Okay. What do we mean by coupon? Okay. And we have defined what do we mean by maturity? What do we mean by maturity? Okay. Also, guys, if the maturity of a bond, okay, if a maturity of the bond is less than 1 year, the company says, I want to raise capital and I will make sure I return the principal and interest within 1 year. That bond is known as a money market security. That bond is known as a money market security. But if the company says, I am going to return the principal along with the interest and it is going to take me more than 1 year, that is known as a capital market security. That is known as a capital market security. Third, if the company tells you that I am never ever going to repay the principal amount, I am never ever going to repay the principal amount, but what I will do is I will keep on giving you interest for your whole life, only the interest. That is known as a perpetual bond. That is known as a perpetual bond. Okay. Next page. Okay. Now, floating rate notes or floaters. घबरा नहीं जाना है हमें. We don't need to get scared whenever we hear the term floaters or a floating rate note. It is very, very, very simple. Okay. Suppose there is a bond. Let's just say there is a bond. Reliance has issued one bond. Okay. Reliance has issued a bond. This piece of paper is known as a bond indenture. This piece of paper is known as a bond indenture. Indenture. Okay. And suppose in this bond indenture, the principal amount is given as 100 million. 100 million. Now, the company can give you a fixed interest every year. A fixed interest every year. So the company tells you the coupon rate is 20, if the coupon rate is 20%, that means the company will pay out 20 million as interest every year. The company will pay out 20 million as interest every year. That is a fixed coupon rate. Okay. Now, the second option is the company can say, boss, I am not defining the coupon rate as of now. I will give you the coupon rate, whatever is set in the market. Whatever is set in the market. Okay. That coupon rate is okay. Now, now you will have a question. Okay, sir, how will we know what is the coupon rate set in the market? You will refer to something known as a market reference rate. You will look at something known as a market reference rate. Okay. So suppose in year one, the beginning of that year, the market reference rate was 7%. Beginning of the year, the market reference rate was 7%. Along with this, the company will pay a fixed premium. Let's just say 1%. So the coupon rate is going to be 8% for that year. The coupon rate is going to be 8% for that year. And the company will pay 8 million as interest for that year. Okay. Now, suppose in the next year, the beginning of that year, the market reference rate was 8%. Along with this, the company will pay a fixed premium, a fixed premium that is 1% that the company had decided. Okay, so the total coupon rate would be 8 plus 1%, that is 9%. That is 9%. Okay, now in the third year, let's just say the market reference rate was 6%. Again, the company will pay the fixed premium which was decided, that is plus 1. So the coupon rate would be 7%, and the company will pay 7 million as interest for that year. The company will pay 7 million for that as interest for that year. Now, whenever the coupon rate is changing, that is known as a floating rate note or floater. Am I clear, guys? How do you define a floating rate note or a floater? Give me a yes or a no in the chat box. Next, we are done with what do we mean by floating rate note. We are done with what do we mean by market reference rate. Now, this added margin, the fixed rate that a company had decided, in our case, it was 1%. Okay, this is denoted in basis point. It is denoted in basis point. How do you define basis point? Is very easy. 100 basis point is 1%. Okay, 100 basis point is 1%. If the company tells you it will give you the market reference rate plus 150 basis point, you have to be smart enough to understand that they are referring to 1.5%. If the company tells you they are going to give you the market reference rate plus 300 basis point, you need to understand by 300 basis point, they mean 3% as fixed margin. Okay. Next. Seniority. What do you mean by seniority? Now, whenever a company starts a business, okay, whatever profits, I would say, or whatever revenue they are generating, okay, first and foremost, it will have to pay its debt holders. उसके बाद कुछ बचा तो मिलेगा equity holders को. Now, even in debt holders, there is a seniority. There is a seniority in debt holders. What do you mean by seniority is? I will write it down for you. What do you mean by seniority is? Okay. There is a senior bond, mezzanine bond, and junior bond. Now, let's just say Kingfisher had issued bonds, senior bond, mezzanine bond, junior bond, and Kingfisher has gone bankrupt. Kingfisher के पास पैसा ही नहीं है देने को. ठीक है, तो जो भी एसेट्स किंगफिशर के बेच के सबसे पहले मिलेगा किसको? सीनियर बॉन्ड को. सबसे पहले मिलेगा सीनियर बॉन्ड को. उसके बाद अगर कुछ बचा, उसके बाद if anything is left, it will go to mezzanine bond. And after that, if anything is left, it will go to the junior bond. And finally, सब बॉन्ड होल्डर्स या सब डेट होल्डर्स को पैसा देने के बाद, if any amount is remaining, that will go to equity holders. That will go to equity holders. Okay. That will go to equity holders. Now, even in seniority, guys, since senior bond has an advantage over other bonds, okay, investors are willing to pay a higher price for this bond. Investors are willing to pay a higher price for this bond. Okay, so the price of senior bond would be highest. After that, price for mezzanine bond would be the price of mezzanine bond would be higher, and the lowest price would be for your junior bond. Lowest price would be for your junior bond. Okay. Okay. Now, next, seniority is done. Senior debt ranks higher than junior debt. It is also junior debt is also known as subordinated debt. Junior debt is also known as subordinated debt. Now, a bond may have an embedded option, okay, such as a call option or a put option. This is also very, very, very simple, guys. It's also very, very, very simple. Okay. We'll understand what is a callable bond. We'll understand what is a callable bond. Callable bond. This is a bond. This is a bond where the company has an option to pay back the principal amount earlier. Callable bond is the bond where the company has an option to pay back the principal amount earlier. Okay, so if it was decided that a company is eventually going to pay the principal and interest within 5 years, but if it is a callable bond, the company might have an option to pay back the principal amount, let's just say after 2 years only. After 2 years only, the company can pay back the principal amount. Okay, boss, take your principal back. I am no longer interested in paying the interest amount. So here, we as investors, we are at a disadvantage. As investors, we are at a disadvantage. Investors are at a disadvantage. Like I, as an investor, I thought I will be getting the interest amount for the next 5 years. But after 2 years, I realized the company just gave me back my principal amount, saying, okay, I am no longer going to pay the interest to you. I am no longer interested in this bond. So I am at a disadvantage. So generally, guys, if investors are at a disadvantage, what do you think? Give me an answer to this. What do you think? A demand for a normal bond would be higher, or a demand for a callable bond would be higher? Answer it to me in the chat box. Whose demand would be higher? Normal bond or callable bond? Everyone has got it right. The demand for a normal bond would definitely be higher. The demand for a normal bond would definitely be higher. If the demand for a normal bond is higher, that means price for this bond will also be higher. Simple. Okay. Price for a normal bond will also be higher. Simple. Okay. Next, let us understand what is a puttable bond. Let us understand what is a puttable bond. Puttable bond, this is a bond where investors have an option to demand the principal amount earlier. This is a bond where investors have an option to demand the principal amount earlier. Let's just say I am an investor of Kingfisher Airlines. My bond initially had a maturity of 10 years. My bond initially had a maturity of 10 years. Okay. So after 10 years, like for the next 10 years, the company will pay the principal and interest amount uh, within 10 years. Okay. Now, after 3 years, I realize Kingfisher, there's a lot of problems going on in Kingfisher, and I feel it will go into bankruptcy. I am very scared. I am very scared now. So now I have an option to tell the company, you give me my principal amount back. I no longer want to be an investor in your company. You give me my principal amount back. Okay. This is a puttable option. Now tell me something. If investors have an advantage in a puttable option, whose demand would be higher? Puttable bond demand would be higher or a normal bond? Normal bond. Your puttable bond demand will definitely be higher because investors have an advantage for it. Now, since investors' demand for a puttable bond is higher, that means the price that they would be willing to pay for this bond, that would be higher. That means the price that they would be willing to pay for this bond, that would be higher. Okay. Next. So we are done with callable bond and puttable bond. Okay. There are also bonds which have an option to convert their bonds into equity. Okay. To convert, like suppose if I have 5 bonds of Reliance, okay, I will have the option to give the bond back to the company and in return get shares of Reliance. This is known as a convertible bond. We are going to understand convertible bond in a little bit more detail in your further readings. In level 1, convertible bond has only been, they have only given a basic explanation of convertible bond. In your level 2, convertible bond is explained in great detail. Okay. Chalo. Next is yield measures. Now, this is where most of the people face a problem. Okay, sir, what is the difference between a coupon rate and yield to maturity? What is the difference between a coupon rate and yield to maturity? I'm going to make the concept so easy for you that you will never ever forget it. I will quickly share my Word document. Take it. I'll give you an example. Let's just say Adani. Right now, we are talking about a company. Let's just say Adani Ports. Adani Ports, now they require, let's just say they require a capital of 100 CR because they want to construct a port in Sri Lanka. They want to build a port in Sri Lanka. So now they require capital. Now for this capital, now they want this capital through loans, but through the public. Okay, that is where bonds come into picture. That is when they will issue bonds. Now, whenever we are talking about bonds, first thing that we need to define is price. Sorry, first thing would be the principal amount. Principal amount, also known as face value. So let's just say in this case, the face value is 100 crores. 100 crores. Now, Adani says on this 100 crores, the coupon rate the coupon rate is going to be 10%. The coupon rate is going to be 10%. Okay. And maturity for this bond is going to be 5 years. Maturity for this bond is going to be 5 years. Now, first and foremost question. Sir, what do you mean by yield to maturity? What do you mean by yield to maturity? I'm going to make it very easy for you now. Okay, let me first draw the timeline for you. Okay, let's just say it's a 5-year bond. 1, 2, 3, 4, 5. Okay, this is today. This is today's date. This is year 1. This is year 2. This is year 3. This is year 4. This is year 5. Now, every year you will be getting a fixed income. This is a security where you are getting a fixed income. Okay, the fixed income is going to be 10% of 100 crores. 10% of 100 crores. Okay, can you tell me what is the fixed income every year going to be? Answer it in the chat box. 10% of 100 crores. What is 10% of 100 crores? What is the fixed income every year? Very well done, guys. Very well done. Your preparation is going very well. Okay, the fixed income every year, is 10 CR. This is your interest. This is only your interest. Okay, this is only your interest the company has paid. Okay, this is only your interest. Now, sir, what about the principal? How will the company give back the principal amount? How will the company give back the principal amount? Okay, the company will give the entire principal amount. The company will give the entire principal amount in the last year, at the end of last year. Okay, at the end of last year. Remember this, guys. Whenever the company gives back the entire principal amount, at the end of last year, this is known as a bullet structure. This is known as a bullet structure of a bond. Okay, this is known as a bullet structure of a bond. I'm going to repeat it again. Whenever the company gives back the principal amount at the end of the last year, this is known as a bullet structure of the bond. Okay, and that is why the interest is also fixed. 10 CR, 10 CR, 10 CR, 10 CR. अगर कंपनी ने थोड़ा सा प्रिंसिपल पहले दे दिया होता तो even the interest would go down. Would you guys agree? Yes or no? If the company had paid the principal amount in second year, a portion of the principal amount in second year, why will the company pay interest on the entire principal amount? Would you guys agree? Give me a yes or a no. Okay. Now you need to understand, guys. You need to understand whenever we are talking about bonds now, okay, usually what happens is, suppose if I have taken a loan from a bank, if I've taken a 1 crore loan from a bank, okay, this is the principal amount. This is a principal amount. Okay. Now in bonds now, there is something also known as a price of a bond. There's also something known as a price of the bond. What do you mean is, for this entire scheme, okay, every year, consider it like a project. Consider it like a project. First year may you will get 10 crores, second year may you will get 10 crores, third year may you will get 10 crores, fourth year may you will get 10 crores, fifth year may you will get 110 crores. Consider it as a project. Consider it as a project, a business project. So now, for this business project, what is the price that you are willing to pay? What is the price that you are willing to pay? That is known as a price of the bond. Am I clear? That means the cash flows are not going to change. The cash flows are not going to change. Now it will depend on investors' demand. If the demand is higher, they are going to pay a higher price. If the demand is lower, they are going to pay a lower price. Is that crystal clear? The price investors are willing to pay for this bond, it will depend on the demand. If the demand is higher, investors will pay a higher price. If the demand is lower, investors will pay a lower price. Is that crystal clear? Okay. Now, I'm so sorry. Yeah. Let me just erase this. Let me erase this. Okay. Now there is something known as how do we figure out what is the demand? How do we figure out what is the demand? How do we figure out what is the demand is? Through yield to maturity. What do you mean by yield to maturity is, let's just say if I say yield to maturity is, let's just say if I say yield to maturity is 10%. Let's just say if I tell you yield to maturity is 10%, that means investors are demanding a return of 10% year on year on a compounding basis. That means investors are demanding a return of 10% every year on a compounding basis. If I tell you yield to maturity, if I tell you yield to maturity is 15%, if I tell you yield to maturity is 15%, that means investors are demanding a return of 15% year on year on a compounding basis. That means investors are demanding a return of 15% year on year on a compounding basis. Now I will give you two options. Very, very, very important. Option A is, let's just say I am an investor and Shreyas sir is an investor. Shreyas sir is an investor. Okay. My demand is 10% every year. So what do I mean by this? Whenever I'm making an investment, I want a return. Let's just say if anywhere, whenever I'm making an investment, I want a return of 10% year on year. I want a return of 10% year on a compounding basis. And Shreyas sir, when he demands a return of 15% year on year. He demands a return of 15% year on year. Okay. Whenever Shreyas sir is making any investment, he wants a 15% return year on year. Now tell me something. Like I said, the cash flows are fixed. These are not going to change. I am aware about this. Shreyas sir is aware about this. But if Shreyas sir wants a demand of is demanding 15%, what do you think? Who will pay a higher price? Who is willing to pay a higher price? Is it going to be me or is it going to be Shreyas sir? Give me an answer in the chat box. Krusha, absolutely correct. Kashif, Absolutely correct. Because my demand is lower. मुझे तो return ही कम चाहिए. So I will definitely pay a higher price. My demand is lower. My demand for return is lower. I am okay with a low return also. That is where I will pay a higher price. Are we clear with the difference between yield to maturity and coupon rate, guys? So now guys, आपने पूरा majority of the portion complete कर लिया. ठीक है? Let me go back to the reading. Yield to maturity, yield measures the bonds. So whenever you hear the term now YTM, yield to maturity, you have to understand yield to maturity is nothing but the investor's demand for return. What is the return they are demanding year on a compounding basis? Okay. Now let us look at the graph. Let us look at the graph. Okay, I think the graph is given the graph. Yeah. Okay, let us now understand the yield curve. Okay, let us understand now this graph. Now it's very complicated to understand. I'm gonna make it very easy for you here too. Let me go on to, yeah, I will draw a graph for you. Okay, one sec. Let's just say this is YTM, this is YTM, and this is maturity. This is maturity. Now guys, YTM and maturity. Okay, their YTM can be 3%, it can be 5%, it can be 9%. Okay, maturity is 1 year bond, 3 years bond, and 5 years bond, and 5 years bond. Okay, now as your maturity is higher, normally there's a lot of uncertainty, na? Like I do not know if the business will survive even for 10 years. Okay, so that is where I will demand a higher return. That is where for 1 year I'm okay with 3%. For 1 year I'm okay with 3%. For 3 years maybe I will demand a higher return, 5%. For 5 years my demand is 9%. So your normal, this is known as a yield curve. Your normal yield curve is an upward sloping yield curve. The more the maturity, the higher demand for return. The higher demand for return. Okay. And if I'm demanding a higher return, that means the price that I am willing to pay is lower. That means the price that I am willing to pay is lower. Okay. Now, there is one exception to this. There is one exception to this, that is only in financial crisis. That is only in financial crisis. Okay. During financial crisis, what happens is people are scared in the short term. People are scared in the short term, and what they want to do is everyone wants to invest money in the long term. Everyone wants to invest money for the long term. I'm going to repeat it again. During a crisis, investors are really worried. Okay, I do not know if the company is going to survive next year. Okay, so what am I going to do is I'm going to invest in the long term government bonds. I'm going to invest in the long term government bonds. मुझे पता है गवर्नमेंट 10 सालों में तो सब कुछ ठीक कर देगी. Now tell me something. If all investors demand a long term government bond, that means the price that they are willing to pay for that bond, would that be higher or lower? Give me an answer in the chat box. Absolutely correct, guys. Absolutely correct. Since people are willing to pay a higher price also, that means their demand for return is lower. Their demand for return is lower. Okay. So in case of a crisis, what happens is, even for 5 years, I am okay with 3%. Okay. And in case of crisis, your yield curve is downward sloping. 90% of the time, yield curve is upward sloping. Only in cases of crisis where the demand for long-term bonds is higher, that is where the yield curve becomes downward sloping. Is that clear, guys? I had a question, sir. YTM, is it subjective or objective? YTM is actually, it can be subjective also, but how is YTM decided? It's the market rate. What is the market? What is the market condition? Okay. So are we clear with the yield curve? 90% of the time, yield curve is upward sloping. Only 10% of the time where demand for, I'm going to write it down, demand for long term is considered safe. Demand for long term bonds becomes really high because it is considered safe. Okay, that is where the yield curve becomes downward sloping. That is where the yield curve becomes downward sloping. Oh, and one more thing, guys. YTM and coupon rate, they are not dependent. Coupon rate, like, guys, you need to understand. You need to understand one thing. सबसे पहले ना, पता है क्या होगा? सबसे पहले एक बॉन्ड इंडेंचर होगा. सबसे पहले एक बॉन्ड इंडेंचर आएगा. बॉन्ड इंडेंचर. कंपनी company will state the principal year. Company will state the principal year. Company will state the coupon rate. And company will state the maturity. That is the first step. कंपनी ने इशू कर दिया. अब इन्वेस्टर्स अपना, now investors will say ना कि, like, should we pay? Like, will investors will decide na what is the price they are willing to pay. What is the price they are willing to pay? If they are willing to pay a higher price, मतलब investors का YTM कम है. If they are and if they are willing to pay a lower price, that means investors का YTM ज्यादा है. Is that clear? Coupon rate and YTM is not dependent. सबसे पहले principal, coupon and maturity is fixed by the company. एडवर्टाइज करते हैं कि प्रिंसिपल अमाउंट ये है, कूपन अमाउंट ये है, मेच्योरिटी ये है. लेट्स जस्ट से प्रिंसिपल अमाउंट 100 million, कूपन रेट 10%, maturity 10 years. Now this is going to be advertised. Okay, please buy this bond, please buy this bond, please buy this bond. Now if investors are willing to pay a higher price for this bond, that means they are okay with less return also. If investors are willing to pay a lower price for this bond, that means they want a higher return. Am I clear? Is that clear, guys? Is that crystal clear? Give me a yes or a no in the chat box. Okay, chalo. Now, so we are done with we are almost done with the first reading, where they have only explained these 5 things. That is principal amount, coupon rate, maturity, price, and YTM. Okay. Okay. Just quickly we'll revise what do we mean by covenants. quickly we will revise what do we mean by covenants. Covenants na is also nothing. Like I said guys, like I said, सबसे पहले क्या होगा, सबसे पहले बॉन्ड इंडेंचर बनेगा. सबसे पहले एक क्या होगा, बॉन्ड इंडेंचर बनेगा. लेट मी जस्ट राइट इट डाउन. Okay, I have a few questions coming. Let me read what are the questions. Okay. सबसे पहले बॉन्ड इंडेंचर बनेगा. बॉन्ड इंडेंचर. Okay. Now you will have the principal amount here. You will have the principal amount here. You will have the coupon rate. You will have the maturity. Now, along with this, there will be also rules and regulations. There will also be rules and regulations. Example, a company cannot issue more bonds after this. After this. Second rule रहेगा. Second rule is a company cannot issue a company cannot issue more bonds after this. Okay. Second rule is a company has to make the interest payments and principal payments on time. Okay. So these rules and regulations are known as covenants. These rules and regulations are known as covenants. Okay. So when we go, affirmative covenants are basically what the company has to do. Matlab the company has to do this. Those are known as affirmative covenants. Those are known as affirmative covenants. What are known as negative covenants? Negative covenants is what the company cannot do. The company cannot, example, the company cannot use the same assets as collateral. Okay. The company cannot issue bonds with a higher ranking. The company cannot issue bonds of a higher ranking. This is known as a negative pledge clause. Okay. This is known as a negative pledge clause. But there are also situations where if the company wants to raise more capital, it first has to prove itself. That means the debt by EBITDA ratio, let's just consider debt by EBITDA ratio. If the debt by EBITDA ratio is under a certain number, only then the company can issue more can raise more capital. Such conditions are known as incurrence test. Such conditions are known as incurrence test. Okay. Very, very easy. We'll go on to the next reading now. I'm going to repeat it again. Rules and regulations are known as covenants. The rules and regulations that the company has to do, they are known as affirmative covenants. The rules and regulations are, like example, the company, things that the company cannot do, they are known as negative covenants. Okay. Now, under negative covenants now, suppose there are also certain there are also cases where there are certain thresholds. Like if the company passes this threshold, the company can raise more capital. ठीक है, आपने अगर आपका लेजर से अगर आपका रेवेन्यू एक थ्रेशोल्ड पास कर लिया, यू कैन इशू मोर कैपिटल, यू कैन रेज मोर कैपिटल. सच थ्रेशोल्ड्स आर नोन एज incurrence test. Okay, such thresholds are known as incurrence test. ठीक है. Now we'll go on to the next reading, that is reading number fixed income cash flows and type. We have already looked at bullet structure. Where the company is paying the, now there is one more term for principal amount. It is known as par value. The amount, the third term, the third terminology I would say for principal amount is known as par value. It is known as par value. Par value, face value, principal amount, सब same चीज है. There is no difference in between these three terms. Now, whenever the company is paying whenever the company is paying the entire principal amount at the end of the last year, that is known as bullet structure. That is known as bullet structure. So whenever even on your calculators now, whenever even on your calculators, you're trying to find the price of the bond now, whenever you're trying to find the price of the bond, वो जो future value में ना, you will enter the entire principal amount in your bullet structure. Fully amortizing क्या होता है? What do you mean by fully amortizing is the company says कि 5 साल end of the 5 years होने से पहले I will make sure I have paid the principal amount over the years. I have paid the principal amount over the years. Let's just say if the principal amount is 1,000, the company will say, I will make sure every year I am also paying back $200 as principal amount. Now tell me something. If the company is paying $200 every year, is repaying back $200 every year as principal amount, the interest amount every year, will that start to go down or will that start to go up? Give me an answer in the chat box. Everyone is right. Everyone is right. मतलब पहले फर्स्ट ईयर में, let's just say फर्स्ट ईयर में, ठीक है, कंपनी पे 200 as principal. So 800 principal is pending. The company will pay interest on 800. Next year, the company is paid 200 as principal. So 600 principal is pending. The company will pay an interest on 600. Similarly, across the years. Okay. So now, when we look, can you see this, guys? Can you see this? Every year, the company was paying 230.97. Every year, the company was paying 230.97. Every year, the company was paying that. Now, in this, you have the interest amount also, you have the principal amount also. Principal amount every year was 200. That is why your principal amount was going lower. Okay. Now I'll give you a shortcut method. I will give you a shortcut method. Okay. Whenever you have something like a fully amortizing bond now, whenever you have something like a fully amortizing bond and you want to find the price of the bond, आप calculator पे ना, calculator पे can everyone see there is this N, I by Y. PV is also known as price. PV is also known as price. PMT is known as, okay, what is the fixed income every year? What is the fixed income every year? And future value. ठीक है? बुलेट स्ट्रक्चर में ना फ्यूचर वैल्यू में ना पूरा प्रिंसिपल लोगे. Fully amortizing में ना the only difference is future value will keep as 0. Is that crystal clear? Fully amortizing में everything else remains the same. In your fully amortizing bond, future value you will keep it as 0. In a bullet structure, future value you will keep it as the entire principal amount. Is that clear? Is that clear, guys? And last is partial amortizing. Partial amortizing. In your partial amortizing bond, future value can be any random number. whatever the company decides. Okay, the company can decide 1,000 is the principal amount initially. Okay, but I will pay 200 principal at the end of the last year. Okay, so future value will be 200. If the company decides I will pay 50% of the initial principal in the last year, so future value will become 500. Future value will become 500. That is the only difference. You don't need to spend a lot of time understanding bullet structure, partial amortizing, fully amortizing. You will have main questions: find the price of the bond, find the price of the bond, or find the fixed income every year. You will have such questions. In your bullet structure, future value, keep it as the entire principal amount. In your fully amortizing, keep your future value as 0. In your partial amortizing, keep your future value whatever is mentioned in the question. Is that crystal clear? No need to spend more time on this. Okay. Also, guys, after every 2 or 3 readings, if you have any specific questions on that, let me know. After 2 to 3 readings is done, I will address your specific questions. Okay. So that we go in a flow and we are not interrupted every time. Next. Abhina, what do you mean by waterfall structures? What do you mean by waterfall structure? Waterfall कैसा होता है? ऐसा waterfall गिर रहा होता है ना पानी? Like how is a waterfall? Understand what is a waterfall? Like पानी गिर रहा है, right? पानी गिर रहा है नीचे. पानी is flowing down. That is a waterfall. Now in case of companies, पैसा ना ऊपर से नीचे जा रहा है. So सबसे पहले मिलेगा सीनियर को, उसके बाद जूनियर बॉन्ड्स. First is senior, junior, equity holders. That is known as a waterfall structure. That is known as a waterfall structure. Is that clear? What do you mean by a waterfall structure? So basically, first money will go to senior. After that, money will go to junior bonds, if any money is left. That is a waterfall structure. Okay. Now, reinvestment risk now, we are going to learn about in detail in your reading interest rate, risk and return. Reinvestment risk, we are going to learn about it in detail in your reading interest rate, risk and return. Okay. We are done with floaters. Floaters is where the coupon rate is not fixed. Basis point we are done. Okay. Step up coupon bonds. Step up coupon bonds is basically coupon rate increases over time. Okay. Bond indenture है एक bond indenture बना, इसमें the company as coupon rate ना, it is saying, it is advertising, first year में I'll give coupon rate as 4%, second year में I'll give coupon rate as 5%, third year में I'll give coupon rate as 6%, fourth year में I'll give coupon rate as 8%. Okay, that is a step up coupon bond. That is a step up coupon bond. Okay, now what are leverage loans is? What are leverage loans is whenever bonds are issued by companies who have a very bad credit rating. Who have a very bad credit rating. That means they have already taken a lot of loans before and now they are issuing new bonds. Those bonds are known as leveraged loans. Those bonds are known as leveraged loans. Okay. Payment in kind bonds. Payment in kind bonds. Let's just say a company, okay, first year के बाद the company has to pay interest. Now the company does not have any money. The company does not have any money. Okay, initially the company had decided principal is going to be 100 million. Coupon rate is going to be 5%. Okay, so the company has to pay 5 million as interest after year 1. But the company unfortunately does not have any money. Okay. So what will the company do is it will say, instead of paying the interest right now, what I will do is I will add the interest to the principal amount. So I will make the principal as 105. I will make the principal as 105. So next year onwards, you will get a higher interest on the bond. You will get a higher interest on the bond. This is known as payment in kind bond. Am I clear? Now, green bonds are very easy. Okay, green bonds, the only thing you don't, I don't think so there are any questions also on this, but you just need to read these two lines. That's it. Coupon rate increases if certain environmental goals are met. Okay, that's it. If the company is polluting the environment less, if the company gets a certification that the company is producing less CO2, so coupon rate will decrease. That is the only condition. That is what we call as green bonds. Okay. Let us do one thing, guys. Let us do one thing. Let's take a quick 5 minutes break. Exactly 5 minutes. Okay. Till now, if you guys have any questions, please write it in the chat box till now so that I can address it and then we quickly move forward. Okay. Let us take a quick 5 minutes break. Okay, welcome back, guys. Two questions I have. Okay, first is what do you mean by a sinking fund provision, and what do you mean by pari passu? Sinking fund provision. Okay, sinking fund provision, you can call it as a partial amortizing bond. You can call it as a partial amortizing bond. Basically, suppose there's a 20-year maturity bond with principal amount of 300 million. With principal amount of 300 million. Okay. So now according to sinking fund provision, the company can give back the principal amount in stages. Okay. That means in the bond that we are talking about, every year beginning in the 6th year, that is 6th year onwards, the company will have to pay back 20 million as principal. Okay. So after 6 years, the principal amount is kept on going lower. This is known as a sinking fund. The term itself, the fund is sinking. Okay. It is not necessary. These has to be the conditions. These conditions can be variable. But sinking fund provision, you can call it as a partial amortizing bond, where the principal amount can keep on decreasing partially, where the principal amount can keep on decreasing partially over the maturity of the bond. Okay, that is known as sinking fund. Now, sinking fund provision has both advantages and disadvantages. Advantage is that the bond holders are getting the principal amount early, so there is less risk. But think logically and tell me, what do you think the disadvantage would be? If the principal amount has kept on decreasing, what would be the disadvantage? Give me the answer in the chat box, guys. Shreya, the coupon rate will still remain the same. The interest amount will keep on decreasing because the company is paying a less interest now. The coupon rate will still stay the same, but the interest amount will keep on decreasing because the principal amount is less. Okay, so that is a disadvantage. Second disadvantage is, like, suppose if you have got your principal early, okay, now there is also a probability that you might not find a good opportunity. That is known as reinvestment risk. Okay. So the second question was, sir, what do you mean by pari passu? What do you mean by pari passu? Pari passu, okay, a pari passu is an affirmative covenant that the company has to do something. The company has to take a certain action. And what is that action? Suppose the company has issued senior bond and the company has issued junior bond. Senior bond and junior bond. The junior bond has a pari passu provision, has a pari passu clause. Now, what does this pari passu clause say is, if the company goes into bankruptcy and if the company has to sell the assets, the junior bond will have an equal right over the assets. ऐसा नहीं होगा the company will pay back the company will pay the senior bonds earlier. नहीं, आप जब भी उनको पे करोगे, आप हमें भी पे करोगे साथ में. You will do it together. That is a pari passu clause. Is that clear, guys? What do you mean by a pari passu clause? There is no seniority now. Everyone is the same. Okay. What do you mean by a pari passu? That is what pari passu clause states. Is that clear? Kashev, is it clear? Okay. Continuing back where we left. Continuing back where we left. Okay. Now, we have one more bond known as index linked bond. Okay, index linked bond. Okay, now in this case, an index linked bond has coupon payments or a principal value that is based on a specified published index. Okay. Now in this case, like कंपनी ने ना सबसे पहले कंपनी ने ना बॉन्ड इंडेंचर बनाया. लेट मी राइट इट डाउन. कंपनी ने ना बॉन्ड इंडेंचर बनाया है जिसमें वन सेक. दिस इज योर बॉन्ड इंडेंचर. बॉन्ड इंडेंचर. Okay. Now, first the company will define the principal. Second, the company will define the coupon rate. Third, the company will define the maturity. Let's just say principal is 200 million. Coupon rate is 10%. Maturity is 20 years. Okay. Maturity is 20 years. बहुत ज़्यादा हो गया. Let's just say 10 years. Maturity is 10 years. Now, there is a condition. This principal amount can keep on changing with inflation. This principal amount can keep on changing with inflation. मतलब अगर inflation ज़्यादा हुआ तो principal amount भी ज़्यादा हो जाएगा. If inflation is higher, principal amount will also go higher. Those bonds are known as capital index bonds. Those bonds are known as capital index bonds. Okay. The coupon rate remains constant. Principal values increase by the rate of inflation. Okay. Example of capital index bond is TIPS. Easiest example. Treasury inflation protected securities. Okay. Now, if the company says principal amount is going to remain the same, the coupon rate will keep on changing with inflation. The coupon rate will keep on changing with inflation. That is known as interest indexed bonds. Am I clear, guys? Am I clear? Is the difference clear? ठीक है? Okay. So now zero coupon bond is basically where the coupon rate is 0%. The coupon rate is 0%. Okay. Now you will have a question, sir. If the coupon rate is 0%, if the principal amount is 100 million, why would someone invest? Why would someone invest? If I'm getting 0% interest, why would someone invest? That is because the price that you are willing to pay. You are not willing to pay. You will only pay, let's just say 75 million for this. You will only pay 75 million for this scheme. Or you can only pay 65 million for this scheme. So you are still getting a return, right? At the end of maturity, that is known as a zero coupon bond. That is known as a zero coupon bond, where the interest is 0%, where the coupon rate is 0%. But how are you making money? Because the price that you are willing to pay is much lower than the principal amount. The price that you are willing to pay is much lower than the principal amount. Okay. Deferred coupon bond is basically if there is a 10-year bond, there is a provision the company will start paying interest only after 3 years. This is known as a deferred coupon. Your coupon is going to get deferred. Okay. Simple. We have learned about embedded options. We have learned about callable options. Okay. Example of a callable option. Let's just understand. Bond indenture banaya either. You have a bond indenture. Principal amount. Let's just consider principal amount is 100. future value is 100 million. Okay, maturity is 20 years. Coupon rate is 6%. Coupon rate is 6%. Maturity is 20 years. Okay, the bonds can be redeemed by the issuer. The bonds can be redeemed. Now understand this point. Okay, understand this point. मतलब after 5 years, 2022 में issue किया, after 5 years, the company can pay back the principal. कि I don't want to pay interest anymore. Take your principal amount back. And how much principal will the company pay back? 102% of 100 million. That is, the company will pay back 102 million as principal, and the bond is over. The scheme is over. That's it. Second is, the bond can be redeemed by the issuer at 101%. Matlab, after 8 years, the company has the option to take 101 million as principal. The scheme is over. Understood? Okay. Callable bond. So June 2027 is known as the first call date. This 102% is known as call price. This 102% is known as call price. Similarly, in this case, the call price is 101%. Okay, and on June 1st, after June 1st, 2032, the call price is 100%. Okay. Everyone clear with what is call price? Call price is basically nothing but how much the company is going to pay you back as principal. That is known as the call price. In a callable bond, how much the company is going to pay you back as principal, because it is closing the bond early, it is closing the scheme early. So what principal amount the company is going to pay back, that is known as the call price. That is known as the call price. Okay. Okay. Next is puttable bonds. Puttable bonds also, it's the same thing, but in this case, investors have the advantage. Okay, give me back my principal early. Give me back my principal early. Simple. Convertible bonds, like I said, convertible bonds are basically, if you have one bond of a company, you can give back the bond and you can get shares of the company. You can get shares of the company. Now, since advantage is with investors, the demand for these bonds, would that be higher? Would that be lower? Demand for these bonds would be higher or lower, guys? What would be the demand? What would be the demand? It would be higher. It would be higher. That means the price that they are willing to pay is much higher. Price they are willing to pay is much higher. Okay. If investors are willing to pay a higher price, that means their demand for return, that is yield to maturity, is lower. Simple. Okay. These are very basic definitions, guys. Okay. Conversion price is basically par amount per share at which the bond may be converted to common stock. Conversion ratio is, suppose a bond with 1,000 par value. A bond with 1,000 par value. Let's just say total company has issued bonds worth 100. Let's just say company has issued bonds worth 1,000 par value. आपके पास एक बॉन्ड है. आपके पास एक बॉन्ड है. Okay. Conversion price will be set by the company. Conversion price will be set by the company. Okay. If the conversion price is 40, you will get 25 per shares. मतलब $1,000 का बॉन्ड दे दो, 25 शेयर लेके जाओ. That is known as the conversion ratio. Conversion price is set by the company itself. At what price that you will buy the shares, huh, guys? You need to understand one thing. You need to understand one thing. When you are giving back the bond to the company, you have to buy the shares. You have to buy the shares. आपको free में नहीं मिलेंगे shares. You have to buy it. But the conversion price will in most cases, the conversion price will be much lower than the current market price. मतलब market price में, let's just say Reliance. Let's just consider Reliance. market price of Reliance, let's just say market price of Reliance is $100. I'm just giving you an example. Market price of Reliance is $100. Okay. Now you have a convertible bond. That means you can convert 1000 par value of bond into shares. Okay. Into shares at a conversion price of $40. At a conversion price of $40. So you will be able to buy 25 shares. Am I clear? 25 shares at the rate 40. Okay. 25 shares at the rate 40. That means you will have to pay. What is 25 into 40, guys? What is 25 into 40? What is 25 into 40? Can you guys quickly calculate and tell me? Can you guys quickly calculate and tell me what is 25 into 40? Is it thousand? Is it $1,000 only, guys? Is it $1,000? Yes or no? Is it $1,000? Yes or no? तो आप बॉन्ड दे दो, $1,000 दे दो, ठीक है, आपको 25 शेयर मिल जाएंगे. बट नाउ योर मार्केट वैल्यू इज द मार्केट वैल्यू इज अ लॉट, बिकॉज आपके पास 25 शेयर आ गए. ओके, आपके पास 25 शेयर आ गए. दैट मीन्स योर करंट वैल्यू इज नाउ $2,500, राइट? So now we have conversion value is basically whatever shares you have got multiply by the current market price, that is known as a conversion value. Just give me a second, guys. Just give me a moment. So I'm gonna repeat it. I'm gonna repeat it again. Convertible bond is basically, let's just say ये एक बॉन्ड है मेरे पास, 1000 पार वैल्यू का बॉन्ड है, ठीक है. कन्वर्जन प्राइस द कंपनी हैज सेट एट $40. कन्वर्जन प्राइस द कंपनी हैज सेट एज $40. ओके, दैट इज द कन्वर्जन प्राइस. मतलब अगर मेरे पास एक बॉन्ड है $1,000 का, आई विल हैव टू गिव दिस बॉन्ड टू द कंपनी. आई विल हैव टू गिव दिस बॉन्ड टू द कंपनी एट द सेट कन्वर्जन प्राइस सेट बाय द कंपनी. ठीक है, मतलब the company will set a price. Okay, so what I will do is I will give this bond whatever company has set the price. So basically the company owes me, how much does the company owe me? $1,000, right? The company owes me $1,000 as principal. Yes or no? Yes or no? The company owes me $1,000 as principal. Okay, so now I will tell the company, I do not want the principal amount. Give me shares for that. Give me shares for that. Okay, I will get 25 shares. I will get 25 shares. Okay, now conversion value. If the current market value of if the current market value is, let's just say $30 only. So 25 into 30, my market value is then 25 into 30 is $750. Okay. Is it clear, guys? What do you mean by conversion price, conversion ratio, and conversion value? Is this clear? What do you mean by conversion price, conversion ratio, and conversion value? I'm going to repeat it again. One last time. Let's just say मेरे पास I want everyone to answer this. Okay. Uh, I'm gonna give you a new example on this. I there's a high probability you guys are question on this calculation. Okay. I'm gonna give you an example. Suppose we have Adani. Okay. Suppose we have Adani. Adani is saying conversion price. Conversion price is rupees 200. Adani Ports, okay? Conversion price is rupees 200. Okay. And market value or current market price of Adani. Current market price of Adani. Okay, Adani shares. Current market price of Adani shares is, let's just assume current market price of Adani shares is rupees 175. Current market price of Adani shares is rupees 175. I have bonds where principal company owes me, where the principal amount company owes me is rupees 1000. Where the principal amount the company owes me 1000. So I will give back the bond to the company. I will say the company, don't give me my principal amount. Instead, give me shares. Instead, give me shares. Okay. So now conversion ratio is the company will say, okay. The company will say, okay. So how many shares will the company give me, guys? Calculate quickly and tell me how many shares the company will give me. Give me the answer in the chat box. Guys, is it still not clear? Is it still not clear? I can repeat the concept for you. It is very, very. Is it still not clear? I'm not getting any answers for this. Can you guys hear me? Okay, got it. Yes. Instead of 1000, the company will give me 5 shares. The company will give me 5 shares. Okay. The company says, I owe you 1000 rupees. Ek kaam karo, conversion price was set at 200. Take 5 shares. But do you think, guys, will I exercise my option? Will I exercise my option to take the shares instead of bonds? Will I exercise the option? What do you think? Do you think I will exercise the option? Will that increase my net worth? Will that increase my net worth? What do you think, guys? Give me a yes or a no. Too good, guys. Very well done. I will not exercise my option because if I get 5 shares, 175 into 5 is around 5 5s are 25, 7 5s are 35. 50, 35 and 5 is 40. Sorry, I'm so sorry. 5 5s are 25. 2, 7 5s are 35. So 37. 3, 5 1s are 5. 875. My net worth is only 875 now. So I will not exercise the option. I will only exercise the option where my conversion price is much lower than the current market price. When my conversion price is much lower than the current market price. You guys have mastered convertible bonds. This is the only thing you need to remember about convertible bonds, nothing else. Okay. Now, next, we will move forward. Convertible bonds is done. Warrants. Warrants. Okay. Warrants is basically, okay. Now, sometimes now what happens is, suppose this is a bond indenture. This is a bond indenture. Now, iske sath na, the company will issue a warrant also. Let's just say there is one warrant issued with here. Okay. Now, what I can do is, I can only sell the warrant back. I can only give the warrant back to the company and get shares. That's it. Okay. That is the only difference between warrants. I don't have to give the bond to the company. The bond still stays with me. I can only give the warrant and get shares. Okay. Clear? Hai? As an example, warrants will give the holders the right to buy shares for $40, will have value if the common share increases in value above 40. Here, in case of warrants, you have to pay the company some money also because the company does not owe you anything. In convertible bond, the company owes you principal amount. But in case of warrants, the bond is still with you. कंपनी बोलेगी फ्री में पैसा चाहिए आपको, मैं नहीं दूंगा फ्री में, आपको पैसा देना पड़ेगा शेयर्स के लिए. ठीक है. दैट इज द डिफरेंस बिटवीन वॉरेंट्स एंड कन्वर्टेबल बॉन्ड्स. कन्वर्टेबल बॉन्ड्स में the company whatever the company owes you, you give back the the companies at the end of the maturity. The company will still owe you money if you have the bond with you. Convertible bond mein you are selling the bond only, but in case of warrants, you are only detaching the warrant from the bond and you are only giving the warrant to the company. ठीक है. Next, contingent convertible bond. Basically, contingent is basically only bonds can be converted into shares only if special event occurs, only if there's a condition to attach to it. Okay. Those conditions can be variable. You don't have to memorize those conditions at all. But you just need to understand contingent convertible bonds is bonds can be converted into shares only and only when there is a condition that happens. Whereas when a specific event occurs, that's it. Okay. Next. Now, domestic bonds, foreign bonds, I think so. This is very, very easy. Okay. You don't need to understanding that. Samiksha, what do you mean by warrants is, again, like, let's just say one last time I'm going to explain what do you mean by warrants. Okay. Let's just say Adani Ports ने ये बॉन्ड इंडेंचर बनाया है. ओके. वेयर bond indenture principal amount is stated, coupon rate is stated, and you have maturity stated. Okay. You have rules and regulations also. These rules and regulations are known as covenants. Okay. Now, in case of convertible bond, you will give this entire bond back to the company, and whatever the principal amount the company owes you, let's just say the company owes you 1 crore. Let's just say the company owes you 1 crore and the conversion price is 1,000. The conversion price is 1,000. Okay. I'm going to write it down here. Conversion price is 1,000 rupees. Okay. Now, the company owes you 1 crore. Conversion price is 1,000. You will say the company, when you don't need to pay the principal amount back to me, just give me shares. ठीक है, एक काम करो, keep the principal amount with you only. I do not need the principal amount. Just give me shares for that. So the company will pay back 1 crore divided by 1,000. That is around how many shares? 1,000 or 10,000? How many shares is that? 100,000. That would be 1,000 shares, right? That would be 1,000 shares. Let me just quickly calculate and find it out. 1,000 into 1,000 or 10,000 shares. Okay. The company will give me 10,000 shares for this entire bond indenture. Okay. For this entire bond indenture. Now, in case of warrants, what will happen is, along with this bond, the company will attach one more piece of paper. एक attach करेगा ये piece of paper. This is your warrant. Let's just say this is your warrant. Now, what you can do is, you can just remove this piece of paper from here and give the warrant to the company and buy shares at 1,000 rupees. You need to buy shares at 1,000 rupees. You have the option to buy shares at 1,000 rupees. So the company will still owe you 1 crore. Okay. But you also have an advantage of buying shares at 1,000 rupees. Am I clear? That is known as a warrant. Am I clear, guys? So suppose if you want 100 shares for your warrant, so you will give company 1 lakh rupees to the company and get 100 shares. Okay, that's it. So this warrant will go away. Then you have exercised your right of your warrant. Okay, you do not need to give the bond to the company back. The company will still owe you 1 crore. But you had the option to buy shares at the conversion price. That is the difference between convertible bonds and warrants. Okay. Next. Now we are going to understand. How is taxation of a bond. What is the taxation? It's a little bit complicated. That's why I had a few questions about it, and we are going to cover it. Okay. When you have interest coming into your account, that is income for you. Okay. Whenever principal also comes back into your account, how is it treated? Okay. Most often, interest income is taxed as ordinary income. It is taxed as ordinary income. Matlab, agar if you fall into the bracket of 30%, you will have to pay 30% on your interest. Okay. If you are taxed in the bracket of 40%, you will have to pay 40%. Okay. The interest income from bonds issued by municipal governments in the United States. Underline this line very clearly. Okay, there's an exception. Okay. Uh, suppose you have bonds which are issued by the municipal government in the United States. Okay. Now the interest income is most often exempt from national income tax and often from the state income tax. There you do not have. So when you have mostly now in cases of government bonds now, whenever the government is paying interest now, they also give you the right that you do not have to pay any taxes on those. Okay, that is an exception. Now next, whenever a bondholder sells a bond before maturity, okay, whenever a bondholder sells a bond before maturity, it may be a gain or loss relative to its purchase price. Such gains or loss are considered as capital gains income. Okay, now I will tell you what do you mean by that is. I will quickly explain you what do you mean by that is. Suppose this is a bond indenture. Suppose this is a bond indenture. Okay. And this is a normal bond. There's no convertible option. This is a normal bond. Principal amount is 1 crore. Coupon rate is 10%. Maturity is 10 years. Maturity is 10 years. Okay. So every year, you are getting 10 lakhs. Every year you are getting 10 lakhs. Now tell me something. After, let's just say after 5 years, let's just say you have two options. Okay. Suppose there's an investor A, there's an investor B. What do you think? Who will pay a higher price for a bond when maturity? Now think logically. What did I say? If higher the maturity, higher the uncertainty, right? Higher the maturity, higher the uncertainty. Higher the maturity, higher the uncertainty. Okay, suppose the maturity pending, the maturity remaining of this bond is 1 year only, or let's just say 2 years. What do you think? Who would pay a higher price for this bond? Person when he initially bought the bond when maturity was 10 years, or person who is buying the bond when the maturity is 2 years? Who will pay a higher price, 10 years or 2 years? Who will pay a higher price? Tell me. Who will pay a higher price, guys? Quickly. Uncertainty is less in 2 years, right? Uncertainty is less. आपको पता है कंपनी के 2 years तो कुछ नहीं होने वाले कंपनी को. The company, nothing is going to happen to the company. So I am willing to pay a higher price here. I am willing to pay a higher price here. Okay? Yes or no, guys? Yes or no? Yes or no? Quickly. I'm not getting any answers. Price would be higher here. Price would be higher here. Okay? Tamanna, no, Tamanna, you will still pay a higher price when like, okay. Instead of that, one sec, how do I explain it to you in a much more easier way is, let's just say, okay, we are assuming price is lower than the principal amount. Okay, maybe price is 75% of face value, of 75% of face value, or 80% of face value. Okay, but it's always lower than the principal amount. We are assuming that. Now 10 years में ना इन्वेस्टर इज वरिड कि कंपनी 10 years तक सर्वाइव करेगी कि नहीं करेगी. You are worried the company will be able to survive 10 years or no. That is why you want to pay a lower price here. 2 years में तो what will the investor say? अरे मेरे को तो बैठे बैठे 10-20 lakhs मिल रहे, मुझे बैठे बैठे 20 lakhs मिल रहे. Okay, so I am willing to pay a higher price. Okay, so now there is a possibility. I have bought the bond at 10 years. I have bought the bond at 10 years for a price of 75% of face value. That is 75 lakhs. Okay. Now the price of the bond has become 90% of face value. Now the price has become 90% of face value. Okay. So I can buy and I can sell it also. So I will have a capital gain tax. I will have a capital gain tax. Am I clear, guys? Am I clear? One sec. Where is the... Let me just... Yeah. So I'm gonna repeat it again, guys. I'm gonna repeat it again. Okay. Bonds, capital gain, when a bondholder sells a coupon bond before maturity, it may be at a gain or a loss to its relative purchase price. Such gains and loss are considered as capital gains. Okay. Capital gains are taxed at a lower rate than ordinary income. Like even when you have shares, like even in India, okay, capital gains are only 20%, but ordinary income is 40%. Okay. Capital gains are lower at capital gains are often taxed at a lower rate. Okay. Now, now capital gains can also be classified into short-term capital gain and long-term capital gain. Okay. Of course, short-term capital gain tax rate is higher. Long-term capital gain tax is lower. Okay. Original issue discount bond. Now let us talk about zero coupon bonds. अभी आपको एकदम अच्छे से समझ में आ जाएगा. अभी आपको एकदम अच्छे से समझ में आ जाएगा व्हाट आई एम टॉकिंग अबाउट. आई विल गिव यू एन एग्जांपल. लेट्स जस्ट से Adani Ports. It has issued a bond which is 3 years. Coupon rate is 0%. Coupon rate is 0%. Okay. Coupon rate is 0. I'm just giving you an example price of the bond. Just giving you an example. Yield to maturity. Or I'm just giving you an example. Okay. Let's just say the price the investors were willing to pay for this bond, the price the investors were willing to pay for this bond was just an example. Guys, price is always calculated using yield to maturity. Okay. But to make it relatively faster, we are assuming price for this bond, price for this bond. Let me not write it here. So, because otherwise things will get, this is my bond indenture. This is my bond indenture. Okay. Now, I have paid, the amount I have paid for this bond is 75% of face value. So what is the price in nominal terms, guys? What is the price in nominal terms? Quickly tell me. What is the price for in nominal terms? If I have paid a price of 75% of face value, what is the price that I have paid? What is the price that I have paid? What is the price that I have paid? Can I say 75 lakhs? Yes or a no? Can I say 75 lakhs? Yes or a no? 75 lakhs. I have paid 75 lakhs for this bond. I have paid 75 lakhs for this bond. Yes. Okay. Now, 2 साल निकल गए. 2 years have gone by. Only 1 year is remaining. Only 1 year is remaining. Okay. Only 1 year is remaining. क्या लगता है आपको? Let me just what do you think, guys? Same bond है. Same bond है. Okay. Adani Ports. One sec. Same bond है. The only difference is maturity is 1 year now. Because only 1 year is pending. Maturity 1 year remaining. 1 year remaining. What do you think? Investors will pay a higher price or lower price then? Will they pay a higher price than 75% or lower price? What do you think, guys? Investors will pay a higher price. Now investors are willing to pay a higher price or a lower price? एक साल ही बाकी है ना? So investors can say, I am willing to pay 95% also. 5 लाख रुपए का बैठे बैठे प्रॉफिट होगा मुझे. The demand for this would be higher, right? The demand for this would be higher. Yes. Yes. Perfect. So the price has become 95 lakh now. The price has become 95 lakh now. Because the investors को पता है 5 लाख रुपए ऐसे ही मिल जाएंगे मुझे. तो price has become, the market price has become 95 lakhs now. But what I can do is, if अगर मुझे लग रहा है, if I need money urgently, I can quickly sell I can quickly sell my bond in the market at 95 lakhs. So I have made a profit of 25 lakhs. Yes or no? Yes, absolutely. Okay. Remember one thing, guys. Remember one thing. As the maturity keeps on increasing, price of the bond keeps on reaching the principal amount. Am I clear? This is known as the pull to par effect. What is it known as? Pull to par effect. Is it clear, guys? Whenever a bond is issued at a discount, okay, as the maturity keeps on increasing, price of the bond will go towards the principal amount. Am I clear? Am I clear, guys? Now tell me something. अगर सपोज सिर्फ 1 महीना बाकी है प्राइस को, सिर्फ 1 महीना बाकी है, 1 महीना एक्सपायरी को बाकी है. व्हाट डू यू थिंक? व्हाट डू यू थिंक? प्राइस कैन बिकम 99% ऑल्सो. यस और नो? बैठे बैठे 1 लाख रुपए मिल रहा है 1 महीने में. यस और नो गाइस? This is known as the pull to par effect. This is known as a pull to par effect. Okay. So in case of, now in case of zero coupon bonds, okay, you do not have interest income here. You do not have interest income here. What do you have is, only capital gains. You only have is capital gains. Okay. But the government is very smart. The government is very smart. Okay. What will the government do is, what will the government do is, previous example में, suppose you bought this bond at 75 lakh rupees. You bought this bond at 75 lakh rupees and you are going to get 1 crore. ठीक है. आपने 3 ईयर तक होल्ड किया. What is your gains, guys? What is your gains? What are your gains? What are your gains? What are your gains? Quickly. Are your gains 25 lakhs here in this case? Yes or no? Is your gain 25 lakhs? Yes or no? Yes or no, guys? If your gain is 25 lakhs, the government is very smart. गवर्नमेंट बोलेगी कि आपको क्या लोअर टैक्स भरेंगे आप इस पे? बिल्कुल भी नहीं. आप what you will do is, you will divide this 25 lakhs by 3 years. You will divide this 25 lakhs by 3 years. So which roughly comes to 8.33 lakhs. So every year you pay an interest income on 8.3 lakhs. Am I clear? This is how your zero coupon discount bond is treated. This is how your zero coupon discount bond is treated. भले आपको पैसा नहीं आ रहा है फर्स्ट ईयर के बाद, you have to pay taxes on, if you have hold a bond till maturity. Okay. You see this, because the gains over an original issue discount bond, as the price moves towards par value, which is, the government sees it as interest income only. The government sees it as interest income only. These bonds can generate a tax liability. ठीक है. आपके लाइबिलिटी बढ़ते रहेगा कि these are the taxes that you owe to the government. Okay. But if you have sold a bond early, if you have sold a bond early, if you have not hold it till maturity, if you have sold it early, then that will be treated as a capital gain. But if you have hold it till maturity, okay, whatever gains you have made, you will divide it by the maturity, and whatever amount that you get, you have to pay an interest income on that. Is that clear? Is the difference clear, guys? Is the difference clear? I'm gonna repeat it again. अगर आपने, if you have sold a bond before maturity, whatever amount you have made, that is known as a capital gain. That will be a capital gain. But अगर आपने maturity तक hold कर लिया, if you have hold it till maturity, okay, the gains that you have made, you will divide it by the maturity of the term, and whatever amount you get, you have to pay an interest income on that. You don't pay the capital tax rate, you pay your personal tax rate. Is that clear? Is that clear? ठीक है. So I guess we are done with the reading number 2 as well. ठीक है. And now I'm going to look at we are going to look at the important readings, okay, where the concepts were a little bit difficult. The next difficult concept now, which most of the students have a problem in, is fixed income markets for corporate issuers. Fixed income markets for corporate issuers. Now, in this case, now everyone has some difficulty in repurchase agreement. You guys would agree, yes or no? Repurchase agreement. Everyone has some difficulty in repurchase agreement. Just give me a moment, guys. Just give me a moment. Okay. Now, for the next 15-20 minutes, we are going to solely focus on repurchase agreement. And I can assure you guys, you will never ever face a problem in this. How to solve the repurchase agreement problems. Take it. Let me open my, yeah. Repurchase, whenever you hear about the repurchase agreement now, whenever you hear about repurchase agreement now, the simplest example that you have to refer to is the simplest example that you have to refer to is mostly everyone has seen it. Okay, suppose suppose my family, or let's just say my mom has gold worth uh, 15 lakhs. Okay, and she wants money now. She will go to a jewelry store and she will say, keep this gold and give me some money. Give me some money. Let's just say I want my mom wants 10 lakh rupees. Okay, and now what is happened? The condition is I will buy back my gold after 3 months for 11 lakhs. I will buy back my gold after 3 months for 11 lakhs. So she took 10 lakh rupees. She has to pay back 11 lakhs. So that extra profit of 1 lakh, that is known as the interest for the jewelry store. That is known as an interest. Clear? Hai? Is this clear, guys? Give me a yes or a no in the chat box quickly. Is that clear? The condition is I don't want different gold. I want my gold only. That is of sentimental value to me. So I will buy back my gold only from you at 11 lakhs. Okay. So the jewelry store will say, हाँ चलो 3 महीने में मुझे तो 1 लाख का प्रॉफिट हो रहा है. 3 महीने में मुझे तो 1 लाख का प्रॉफिट हो रहा है. Okay. I am getting a profit of 1 lakh rupees. Okay. Now, what we are gonna do is, we are gonna replace gold. We are gonna replace gold with bonds. We are gonna replace gold with bonds. Okay, and especially which bonds are we talking about? We are talking about bonds who have. We are talking about bonds. We are talking about bonds where the maturity is less than 1 year. We are talking about bonds maturity is less than 1 year. We are talking about bonds whose maturity is less than 1 year. Also, guys, before moving ahead, please note this down. Important note. Important note. Bonds that have a maturity less than 1 year, their coupon rate is 0%. Their coupon rate is 0%. Okay. So whatever the bond indenture is, it is basically the principal amount only, and the price investors are willing to pay for this bond, it is at a discount to the principal amount. Okay. Now, coming back to the example, let's just say my mom has bonds whose maturity is less than 1 year, where the principal amount, is 15 lakhs. Okay. Keep these bonds and give me some money. Keep these bonds and give me some money. Now, whichever person, the person who is buying this bond, the person who is keeping these bonds with themselves, and lending money, let's just say money lent is 10 lakhs. This money lent is known as a purchase price. What is it known as? Purchase price. I'm going to repeat it again. This money lent is known as purchase price. This money lent is known as purchase price. Is everyone clear with what is a purchase price? Is everyone clear with what is a purchase price? Everyone clear with what is a purchase price? The money lent by the person, or the money lent by the company who is keeping the bonds with themselves, who is lending the money they have lent is known as the purchase price. Now, condition is I will buy back my bonds after 3 months. I will buy back my bonds after 3 months for 11 lakhs. For 11 lakhs. This 11 lakhs is known as a repurchase price. This 11 lakhs is known as a repurchase price. Is this clear? Is it clear? This 11 lakhs is known as a repurchase price. Okay. Now, how do you calculate the purchase price and the repurchase price? Let us look at an example. In your Schwezer notes only, write it down in your Schwezer notes. Okay. 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 An example. We'll look at an example. Okay. We'll look at an example. A company, a firm that wishes to borrow money. उनको पैसा चाहिए by entering into a repo agreement to sell a bond today with a market value of 1 million. This market value of 1 million and repurchase it 90 days later. ठीक है, the lender requires a repo rate of 2% and initial margin. First, let us understand repo rate. ठीक है. Now, what is repo rate is? What is repo rate is? How do you calculate the purchase price? How do you calculate how much money is going to be lent? How do you calculate how much money is going to be lent? How do you calculate? I'm going to write it down here. How do you calculate how much money is going to be lent? Or what is going to be the purchase price? Going to be, it's not looking clear. So how much money is going to be lent is, you will have to know what is the initial margin. You will have to know what is the initial margin. You will have to know what is the initial margin. Suppose the market value of bonds is 1 million. The market value of bonds is 1 billion. Okay. Okay. Now, what will the company do is, what will now, uh, the market value can keep on fluctuating, guys. Yes or no? Suppose the company gets very risky. The company gets very risky. So the bonds ka market value will increase or decrease. The bonds ka market value will increase or decrease. The bonds ka market value, will it increase or will it decrease if the company becomes very risky? Tell me, guys. If the company becomes very risky, if suddenly there is a news, the company is filing for bankruptcy, so the market value of bonds will drastically go down. Yes, yes. So even the person who is lending money, he needs to keep himself safe. So whatever amount he is going to lend, that is always going to be lower than the market price of the bonds. Whatever amount he is going to lend, that is always going to be lower than the market value. So what is the amount that is going to lend is market value of securities divided by the initial margin. Divided by the initial margin. Okay. So the amount the person is going to lend is 970,874. ठीक है? हमेशा गाइस, हमेशा याद रखो, जब बैंक भी लोन देती है, and if you keep and if you have a collateral, if you keep your house as collateral, what do they make sure that the value of the house is much greater than the loan they have issued? Yes or no? The value of the house is much greater than the loan they have issued. Yes. So you will always divide, okay? You will always divide the market value by the initial margin. So this is the loan that they have given. This is the loan they have given. Now, what is going to be the repurchase price? What is going to be the repurchase price? How do you recalculate a repurchase price? You will need to know the interest rate. You will need to know what is the interest rate. Give me a yes or a no. You will need to know what is the interest rate. Yes or a no. Okay. Now, in case of repurchase agreement, the interest rate that you refer to as repo rate. The interest rate that you refer to as repo rate. Now, guys, in your fixed income curriculum, whenever they are talking about any rate, coupon rate le lo, yield to maturity le lo, repo rate le lo, they are always, in your question, it is always assuming that is for a year. So in this case, they are assuming 2% is for 360 days. 2% is for 360 days. But आपको लोन कितने के लिए चाहिए? Only for 90 days के लिए चाहिए. आपको लोन चाहिए only for 90 days. So what is the interest rate that you are going to give? Cross multiply it and find it out. Cross multiply it and find it out. Let me remove my calculator once. Okay. So 2% multiplied by 90 divided by 360 into 100. So I am going to pay an interest rate of 0.5%. Is this 0.5% crystal clear for everyone? Is everyone able to get 0.5%? Give me a yes or a no in the chat box quickly. Okay. Now, so whatever loan I have taken, I will have to add, interest to that 1 plus 0.5%. Okay. So what is the amount that you get? What is the amount that you get that you have to pay back? That will be 975, 728. That is known as the repurchase price. Simple. That is known as a repurchase price. Simple. Am I clear? Am I clear, guys? Am I clear? Okay. So if I have taken a loan, very easy example, if I've taken a loan of 1 lakh and if 10% is the interest rate, I will add 10% to it. That will become 1,10,000. Okay. So this is known as the repurchase price. This is known as a repurchase price. Now, what do you mean by a haircut is? What do you mean by a haircut is? Okay. Very easy. Market value of security कितनी है? 1 million. ठीक है? Market value of security is 1 million. What is the loan issued? 970. तो 1 million को मैं कितने से डिस्काउंट करूं? What is the discount rate? ठीक है? Very easy example. Suppose there is one Nike shoes. Suppose there is a one Nike shoes. MRP is 25,000. MRP is 25,000. Okay. But there is a discount going on. There's a discount going on and you bought it. You bought it. You bought it at 12,500. So what is the discount, guys? What is the discount? What is the discount rate? Can you tell me what is the discount rate here? What is the discount rate here? Is it 50% discount, guys? Is it 50% discount? Yes or no? 25,000 का शूज था, आपने खरीदा 12,500 में. Can I say you bought it at a 50% discount? Yes or no? Yes or no? Quickly. Yes or no, guys? 50% discount. Did you buy it at a 50% discount, guys? I'm not getting any answers. Just give me a second. Yeah. So हमने ये 50% डिस्काउंट कैसे निकाला? How did we find this 50% discount? 25,000 minus 12,500 divided by 25,000. Similarly, in case of your haircut, the market value of security minus the loan given divided by the market value of security. Simple. That is known as a haircut. That is known as a haircut. Okay. Now, So in this case, 1 million minus 978.74 divided by 1 million. So haircut is 2.91%. The haircut is 2.91%. Okay. If you want to memorize something, you can just memorize this formula. But if you want to think logically, मार्केट वैल्यू कितनी थी, आपने लोन कितना दिया, ठीक है, तो मतलब कितने डिस्काउंट पे दिया, दैट इज नोन एज अ हेयर कट. ओके. Now, important concept is there's one important concept which is known as variation margin. Variation margin. ठीक है? Stay laser focused for the next 10 minutes. Trust me, this variation margin is also going to be very crystal clear. ठीक है? This variation margin is going to be crystal clear. Let's just say you have taken a loan of 978.74. Let's just say you have taken a loan of 978.74. Okay. So Animesh is saying, sir, initial margin will be decided by lender or initial margin. It is the market norm only, Animesh. It is a market norm, whatever the market is offering. Okay. Okay. Now you have taken a loan for 90 days. Okay. But suppose after 30 days, after 30, okay, 30 days have passed by. 30 days have passed by. Tell me something. The person who has given you a loan, okay, is he entitled to some interest even after 30 days also? If like after 30 days he wants to close the loan, if the person wants to close the loan, is the person entitled to interest for 30 days? Give me a yes or a no. Suppose initially the loan was for 90 days, okay? But one party wants to close the loan after 30 days itself. Okay? So the person who has given the loan, isme he will be entitled to some interest amount. Give me a yes or a no. He will be entitled to some interest amount. Give me a yes or a no. I'm going very slow, guys. Okay? I'm giving you time. Think about it. ठीक है. Let us calculate now कि what is the interest for 30 days. Similarly we are going to calculate. Is 2%. 2% is for 360. आपको दिया हुआ है 2% is for 360. तो 30 days का कितना होगा? 30 days का कितना होगा? What would be the interest rate for 30 days? That is 2% multiplied by 30 divided by 360. That is around 0.167% or 0.1667%. Yes or no? 0.1667%. Yes or no? Absolutely correct. Tushar, absolutely correct. Tamanna, absolutely correct. So after 30 days, can you guys tell me, after 30 days, what is the repurchase price? Can you tell me, after 30 days, what would be the repurchase price? Add 0.167% here. And tell me what would be the repurchase price. Add 0.1%, add 0.166% here and tell me what would be the repurchase price. How am I going to add it is like simple आपको करना है ब्रैकेट में 1 plus 0.1667%. ओके कितना होगा 972 around 972 492 na Krusha, have you taken up to 4 decimals? It would be 972 492.1233. Yes or no? It would be 972, 492, yes or a no, guys? It would be 972, 492, yes or a no? Quickly. 972, 492. Is everyone getting 972, 492? I'm waiting for 1 minute. Okay. So 972, 492. ठीक है 972 492. Now let's just assume. Okay, I'm gonna write this down. 972 492 here. Just a moment. 972 492. ठीक है. Now let's just assume after 30 days there is one person who requires a loan of 972 492 from the same person, who requires a loan of 972 492 from the same person, but he requires it for 60 days. He requires it for 60 days now. ठीक है. Initial margin is the same, 103%. Can you tell me what should be the market value of security for him? Can you tell me what should be the market value of security for him? Can you tell me what should be the market value of security for him? Initial margin is still 103%. Can you tell me what should be the collateral he will have to give? Calculate and tell me. What you will do is you will like same formula mein. You will just multiply initial margin by purchase price, right? Yes or no, guys? No, Krusha, how did you get 944, 167? 103% is the initial margin, right? A person who requires a loan of 970 to 492, which is the purchase price, initial margin is still 103%. What should be the market value of security? What should be the market value? How much collateral he will have to give to the person? How much collateral he will have to give to the person? How much collateral? Are you guys getting? Are you guys getting 1001667 approximately? Are you guys getting this? Are you guys getting this? 1001667 approximately. Are you guys getting this? But now we are assuming, okay, that should be the collateral. That should be the collateral. But suppose the market value of the collateral has gone down to 990. The market value of the collateral has gone down to 990. ठीक है. मतलब बोरोवर बोलेगा मुझे, मेरे पास, जो बोरोवर है उसको बोलेगा मेरे पास तो कोलैटरल होना चाहिए था इतना, बट मार्केट वैल्यू हो गया इतना. ठीक है. This excess amount which he will require as collateral, this excess amount which he will require as collateral, he will call up my mom and he will say आप इतना extra collateral मुझे दो, because now your securities have become more risky. That is known as variation margin. That is known as variation margin. Am I clear? Am I clear, guys? I'm going to explain it once more. I'm going to explain this concept once more. ठीक है. Simple logic में करते. Simple logic. Initial loan amount. This was the initial loan amount. This was the initial loan amount. This was the initial loan amount. Now, initial loan amount and collateral will go hand in hand. Now, initial loan amount and collateral will go hand in hand. Yes or a no? Initial loan amount and collateral will go hand in hand. Yes or a no, guys? आपने जितना ज्यादा कोलैटरल दिया उतना ज्यादा आपको लोन अमाउंट मिलेगा. ठीक है. आपने जितना ज्यादा कोलैटरल दिया, हाउ मच एवर कोलैटरल यू हैव गिवन, उतना ज्यादा लोन अमाउंट. ठीक है. इनिशियल कॉन्ट्रैक्ट वाज फॉर 90 days. Initial contract was for 90 days. Okay. Now, tell me something, guys. Tell me something. You need to uh, think logically. Think logically. Okay. Suppose after, like I said, 30 days have passed by. 30 days have passed by. Okay. 30 days have passed by. Now there is some interest added to this. There is some interest added to this. Okay. On this initial loan amount, there will be some interest added to this. Okay. We get the number. We get a number of 972. We get a number of 972, 492. We get a number of 970 to 492. Now, to calculate variation margin, you put yourself in the place of the borrower. You put yourself, simple है, आप अपने borrower, आप आ जाओ, आप समझ लो आप borrower हो. ठीक है. और आपको ये समझ, you have to understand, if you have to give a loan of 970 to 492, if you have to give a loan of 970 to 492, you simply have to give one answer. Okay, what is the answer that you have to give? How much collateral do I need for this? How much collateral do I need for this? Clear है? ये clear है, guys? How much, if I have to issue a new loan of 970 to 492, what is the collateral I will require? ठीक है. What is the collateral I will require? ठीक है. So, हमें आंसर आया था collateral that I will require. Collateral I will require is around 1,100,667. This is the collateral I will require. But अगर market value of securities, let's just say market value of securities 1 million से हो गई है 11 million. कितना हो गई है? How much is the collateral? 11 million. आपके पास ज्यादा कोलैटरल हो गया, कम कोलैटरल हो गया? आपके पास ज्यादा कोलैटरल है, कम कोलैटरल है? नाउ विथ यू, क्विकली, डू यू हैव मोर कोलैटरल और लेस कोलैटरल विथ यू? डू यू हैव मोर कोलैटरल और लेस कोलैटरल? यू हैव ज्यादा, यू हैव मोर कोलैटरल. तो जितना डिफरेंस होगा ना, that is known as variation margin, and you will have to give that excess collateral back to the person who has taken a loan. You will give back the collateral. थोड़ा सा collateral आपको देना पड़ेगा. अगर कम collateral हुआ, you will demand a higher, you will demand कि आप बॉस आप थोड़ा और bonds दो मुझे. Otherwise, we need to close the loan because your bonds have become more risky. Am I clear? Whenever you are calculating variation margin, you need to understand. ठीक है. एक चीज फिक्स्ड है. एक चीज फिक्स्ड है. Collateral required will always be higher. Can you tell me, as time keeps on passing by, can you tell me why will collateral required, I'm talking about required, will be higher as time keeps on passing by? Answer me this. In a repurchase agreement, as time keeps on passing by, collateral required will always be higher. Can you tell me why? Can you tell me? You will always require a higher collateral. Can you tell me why? Can you tell me why? Rahul, not because the price of bond has increased, but because now now the amount that you owe, the amount that you are entitled to has increased. The amount that you are entitled to has increased. पहले आप you were only entitled to 970, 874. Now after 30 days you are entitled to a higher amount. You are entitled to a higher amount. Now because you are entitled to a higher amount, you will also require a higher collateral. You will also require a higher collateral. Is that clear for everyone? First, forget variation margin, forget everything. Just think about this. Forget it might be risky, forget everything. Forget everything. Just answer this question. As time keeps on passing by, you are entitled to a higher amount. And because you are entitled to a higher amount, the collateral that you will require will also be higher. That you will require will also be higher. Okay? No, Krusha, forget risky, forget everything. Forget risky, forget everything. Logically, samjho. Logically, suppose I was entitled to 1 lakh before. I was entitled to 1 lakh before. I wanted a collateral of 1.5 lakhs. I required a collateral of 1. Now, after few days, I am entitled to 1.1 lakh. Now, after few days, I am entitled to 1.1 lakh. So, now this collateral requirement will also be higher or lower? Will this collateral requirement be higher or lower? Will this collateral require will my requirement for collateral will be higher or lower? If I'm entitled to a higher amount, the collateral I will require will also the collateral I require will also be higher. Yes or no? Now this collateral, higher collateral, you will compare it with the market price. This higher collateral का value you will compare it with the market price. ठीक है? This higher collateral का value you will compare it with the market price. वापस वो सम करेंगे फर्स्ट, यही स्टेप्स में करेंगे फर्स्ट. Initially you were entitled to how much? Initially you were entitled to how much? You were entitled to 970, 874. You were entitled to 970, 874. उसके सामने अपने कोलेटरल कितना मांगा? 1 million का मांगा. After 30 days, you are entitled to this. You are entitled to this. So now, आपका collateral requirement, will it be higher than 1 million, less than 1 million? Will it be higher than 1 million, less than 1 million? Because you are entitled to a higher amount now. You are entitled to a higher amount now. Your collateral will also be higher. Requirement would be higher, yes or no? Yes or no, guys? Higher than 1 million. Of course, higher than 1 million. ठीक है? Let's just say आपका requirement है 1.1 million now. ठीक है? अभी ये 1.1 million को आप क्या करोगे? ये 1.1 million को you will compare it के मार्केट में अभी I require 1.1. अगर मार्केट में वैल्यू हो गया 1.2, अगर मार्केट में वैल्यू हो गया 1.2, सो आई हैव एक्सेस कोलैटरल, आई विल गिव इट बैक टू द पर्सन हु हैज टेकन अ लोन. बट अगर मार्केट में वैल्यू हो गया है 0.9, द मार्केट में वैल्यू हो गया है 0.9, मैं कॉल करूंगा अपने आई विल कॉल अप द पर्सन, आई विल से मुझे रिक्वायरमेंट है 1.1, आप जल्दी से मुझे 200,000 दो वरना मैं लोन क्लोज कर रहा हूं. एम आई क्लियर? एम आई क्लियर गाइस? इज दिस क्लियर? अगर मार्केट में वैल्यू हो गया है, अगर मार्केट में वैल्यू हो गया 1.3, मैं कॉल करूंगा अपने पर्सन को, मुझे रिक्वायरमेंट था 1.1 मिलियन का, मार्केट वैल्यू हैज गॉन टू 1.3, मेरे पास एक्सेस कोलैटरल पड़ा है, मैं क्या करूं, इसका आपको भेज दूं? शुड आई सेंड इट टू यू? This difference is known as variation margin. Am I clear? Market value will be given to you in your questions. You just have to find out कि आपका requirement कितना है. You only need this formula. That's it. Am I clear, guys? You only need this formula. I am giving you guys 1 minute. Think about the repurchase agreement formula, repurchase agreement concept. If you have even the slightest of doubts, let me know so that I can help you out and then we move forward. I'm giving you guys 2 minutes. Okay. Many questions regarding के एक बार समझाओ. What we will do is we'll solve one sum. Okay. And you guys are gonna answer me questions. Okay. You guys are gonna answer me a few questions so that the concept becomes more clear to you guys. We'll solve one sum directly. ठीक है. A borrower pledges 100 million of securities as collateral for an overnight repo with a repo rate of 4% and initial margin of 101%. ठीक है. Now, first is we need to, I'm going to repo agreement. First is market value of collateral कितना है? Market value of collateral is, what is the market value of collateral, guys? In this question, what is the market value of collateral? On day zero, what is the market value of collateral on day zero? What is the market value of collateral on day zero? What is the market value of collateral on day zero? Quickly. The market value of collateral is 100 million. Yes. The market value is 100 million. Yes. I'm going to write 100 million. I'm going to write 100 million. अब ये 100 million. Now for this 100 million, how much money can I get? How much loan can I get? That loan is known as a, what is that loan known as? How much money can I get? How much money can I get for a collateral of 100 million? That is known as a purchase price. That is known as a purchase price. Clear hai? How much money can I get? That is known as a purchase price. Clear hai? Okay. So it would be 100 million divided by the margin. 100 million, or let me, 100 million divided by the margin. What is the margin in this case? What is the margin? 101%. 101%. So that is 1.01. So what is the purchase price, guys? How much collateral can I get? How much loan can I get? How much loan can I get? 100 divided by 1.01. Is it 99.0099? Yes or no? Has everyone got 99.0099? Yes or no? Has everyone got 99.009? Purchase price clear हो गया? Purchase price clear हो गया? Yes. Now, let's just say the repo rate was, ठीक है, ये इसका आंसर 90, द परचेज प्राइस तो क्लियर है, द आंसर वुड बी बी. नाउ आई एम गोइंग टू इंक्लूड माय assumptions and explain you the concept. Okay, suppose the repo rate is 4%, assuming 360 days. रेपो रेट इज 4%, assuming 360 days. तो अगर 4% is for 360 days, ठीक है, 4% is for 360 days. तो इधर तो ओवरनाइट रेपो दिया हुआ है आपको, ओवरनाइट रेपो दिया हुआ है, तो ओवरनाइट वुड बी 1 day का ना. let me do one thing let me do one thing I let me do one thing let me do is let me just change the question a little bit. Okay, let me just change the question a little bit. Suppose the suppose in this case initial margin 105%. Can you tell me what would be the purchase price? What would be the purchase price then? If the margin was 5%, 105%, what would be the purchase price? Quickly. What would be the purchase price? 105% is the initial margin. What is the loan? How much money can I get for a collateral of 100 million? क्या आएगा आंसर इसका? Is it 95.2381? Is everyone getting 95.2381 million? Yes or no? Yes or no, guys? ठीक है. Now let's just assume the repo rate is 4%. The repo rate is 4%. Okay. The repo rate is 4%. Okay. And the loan is for 90 days. The loan is for 90 days. ठीक है. The repo rate is for 4% and the loan is for 90 days. Now tell me something. As the days keep on passing by, the person who has given you money, is he entitled to a higher amount? I'm going to write this down. As days keep on passing by, the person who has given you money, is he entitled to a higher amount? Yes or no? Yes or no? After 30 days, what amount is he entitled to? What amount is he entitled to? After 30 days, what amount is he entitled to? How will I calculate that? How will I calculate this? 4% is for 90 days, is for 360 days. We are assuming 360 only. Okay? So for 30 days, how much? For 30 days, how much? Cross multiply it. Cross multiply it. Okay. And I will get the answer as 4% into 30 divided by 360. That is 0.3333%. Is everyone getting 0.3333%? Yes or no? Yes or no? So how do I calculate what amount is he entitled to? How do I calculate what amount is he entitled to? 95.2381 multiply bracket 1 plus 0.3333%. क्या आता है इसका आंसर? क्या आता है इसका आंसर? क्विकली. What is the answer to what is the answer to this? Is it 95.5556? Yes or no? Is it 95.556? Is it 95.556? Abhi, higher the loan amount is equal to higher the collateral, lower the collateral. Higher the loan amount is higher the collateral, lower the collateral. Higher the loan amount is higher the collateral, lower the collateral. Higher the loan amount would be higher the collateral, lower the collateral. Higher the collateral. Higher the collateral. So I will cancel this out. Okay. Higher the loan amount is higher the collateral. Let me cancel this out. Let me cancel this out. So what should be the collateral then? What should be the collateral then? How do I calculate is using the first formula only. But अभी लोन अमाउंट आप लोगे 95.9556 is equal to the collateral. How much collateral do I require? X divided by कितना था आपका margin? What was the margin? What was your margin? 105%. Yes or no? 105%. कितना आ रहा है collateral? What is your requirement? Too good, Sanjay. What should be the collateral? What should be the collateral? Is it 100.33333 million? Is it 100.3333 million? Yes or no? Is it 100.333 million? याद रखना, as days keep on passing by, I am entitled to a higher amount because I have given you a loan. So, and the more money I am entitled to, the more collateral I require. The more collateral I require. ठीक है? अब I require this. I require this. ठीक है? This is what I require. मैं ना सर्च करूंगा कि बॉस मार्केट में, पहले एक फोन लगाऊंगा. फोन लगाया, मैंने पूछा मार्केट में इसका रेट क्या चल रहा है, एंड आई गेट टू नो मार्केट में जो जो मेरे पास कोलैटरल्स है उसका रेट है 105 million. नहीं, मार्केट में मुझे पता चलता है रेट है 105 million. सो डू आई हैव एन एक्सेस और डू आई हैव लेस? डू आई हैव एन एक्सेस? डू आई हैव लेस? पहले मैं फोन लगाया स्टॉक एक्सचेंज, पहले मैं फोन लगाया एक्सचेंज पे. एक्सचेंज से मुझे पता चला कि मार्केट का रेट है 105. आई रिक्वायर 100.333. मेरे पास ज्यादा पड़ा हुआ है, कम पड़ा हुआ है? मेरे पास एक्सेस है. तो आई विल गिव अ कॉल कि सर आपने मुझे जो कोलैटरल दिया था मेरे पास एक्स्ट्रा पड़ा हुआ है, क्या करूं मैं उसका? व्हाट शुड आई डू? शुड आई गिव यू सम कोलैटरल बैक? नो संजय, आई हैव एक्सेस ना. I require only 100.33, but market value is greater. Correct? So whoever has given me the collateral, I will dial his number. I will say, "Hey boss, I have an excess of I have an excess of 4.7 million. What should I do? Should I send you some collateral back?" That is known as a variance margin. ठीक है? Suppose market में phone लगाया, I get to know market value has decreased to 99 million. Market value has decreased to 99 million. मैं फटाफट फोन लगाऊंगा तुरंत. आई विल नॉट इवन टेक अ सेकेंड. आई विल कॉल बैक. बॉस, आपने मुझे कोलैटरल दिया था. वॉट एवर कोलैटरल यू हैड गिवन, मार्केट रेट इज 99. आई रिक्वायर 100.33. आर यू सेंडिंग मी मोर और शुड आई क्लोज द लोन? एम आई क्लियर? इज दिस क्लियर गाइस? This is known as variation margin. This is known as variation margin. Is it clear for everyone? Is it clear for everyone? Is the concept now clear? Again, I'm giving you guys 2 minutes. Think about it. Let me know. Is the concept now clear? So guys, as days keep on passing by, the amount I am entitled to will be higher. So the collateral that I will require will be higher. I will compare my requirement with the market value, और वो जो difference है, that is known as variation margin. Last time, as days keep on passing by, the amount that I am entitled to will be higher. So the collateral I will require will be higher. ठीक है? Now I am going to compare my requirement with the market value. That difference is known as variation margin. ठीक है? Clear है? Let's do one thing, guys. Let's take a quick 5 minutes break. ठीक है? Have some water. Think about whatever we have learned till now. Okay, in the last part of the session, we are going to cover how do you calculate price of a semi-annual bond, how do you calculate price of a quarterly bond, how do you calculate price of an illiquid bond. Okay, chalo, see you in exactly 5 minutes, guys. Welcome back, guys. Am I audible? Am I audible, guys? Give me a yes or a no quickly. Okay, chalo. Now, like I said, guys, calculating price of a semi-annual bond, quarterly bond. Semi-annual bond is basically the company is going to pay you interest every 6 months. Quarterly is basically the company is going to pay you interest every quarter. So how do you calculate the prices? Okay. Remember one thing, guys. Whenever you want to calculate whenever you want to calculate the price, okay, on your calculators, you only have to use these five: N, I by Y, PV, PMT, FV. I'm going to write it down here. N N is maturity. I by Y is yield to maturity. PV is price. Okay. PMT is your your fixed income. Fixed income the company is going to give you every year. Fixed income. Okay. Fixed income. Every year, every 6 months or every quarter. And last is FV is your principal amount. Now, in these, okay, let's just say maturity is 5 years. Maturity is, I'm gonna just write it down like this: 5 years. Okay. Yield to maturity is 10%. Yield to maturity is 10%. ठीक है. PMT, your principal amount is 100 million. Principal amount is 100 million. So, and coupon rate. Let's just say the coupon rate is 5%. So fixed income would be 5 million. Okay. I have to include one thing: coupon rate. 5%. Okay. Now, guys, price, let's just say price also, like some random price. Okay. Now tell me something. In these five, what do you say? In these five components, I would say, which two are in percentage terms? Which two are in percentage terms? Tell me. Which two are in percentage terms? Is it I by Y? Is it your yield to maturity? and the coupon rate, yes or no? Is it I by yield to maturity and coupon rate, yes or no? Okay. Now, if the bond is a semi-annual bond, now you will divide both the two percentages by 2. You will divide both the percentages by 2. Simple. Okay. So your fixed income would become 2.5 million. PMT would be 2.5 million. Okay. And in a semi-annual bond, your maturity will multiply it by 2. Bus, that is the only thing you need to do. For a quarterly bond, what you will do is percentage कौन से I by Y and coupon rate. So you will divide both the percentages by 4. You will divide both the percentages by 4 and maturity you will multiply it by 4. Simple. That is it. That is it. Let us look at one example. Okay. Computing the value of a semi-annual coupon bond. Okay. Assuming an annual YTM of 8%. Assuming an annual YTM of 8%. Okay. एक काम करते हैं. I think the question is given up. थोड़ा ऊपर. I will go to the question and I'll tell you. Where is the question for this? I need to find a question so that 1 second. ठीक है. This one. Okay, this one. Tell me, an analyst observes a 5-year 10% semi-annual pay bond. The face amount is 1,000. Yield to maturity is 15%. N कितना initially पहले आप N कितना लिखोगे? What would be N? N is 5, given as 5. Yes. Okay. I by Y is given as 15%. I by Y is given as 15%. Coupon rate is given as 10%. Okay, coupon rate is given %. Principal amount is given as 1,000. Now the only adjustment you need to make is while calculating the price of a bond on your calculators, what you need to do is you need to divide the two percentages by 2. Okay. So on your calculator as I by Y, you will enter 7.5. 7.5. Coupon rate also divided by 2. So coupon rate is 5%. Okay. And maturity you will multiply it by 2. That's it. Simple. If it is a quarterly bond, you will divide 15% by 4, coupon rate by 4, multiply maturity by 4. Simple. If it is a monthly bond, 15% by 12, 10% by 12, 5 into 12. Simple. Okay. Now, let us understand what do you mean by accrued interest, flat price, and a full price. Let us understand what do you mean by accrued interest, flat price, and a full price. Okay. Okay. We'll look at an example. An investor buys a 4% annual pay that pays its coupon on May 15th. The investor's order settles on August 10th. Calculate the accrued interest that is owed to the bond seller using the 30 by 360 method and the actual by actual method. Okay. First, let us draw a timeline. Let us just draw a timeline. Okay. Let us draw a timeline. Now in this, the maturity is not given. So I'm going to keep it as uncertain. Okay. Let's just say this is today. This is today. It is an annual pay bond only. It is an annual pay bond. So after 1 year, it will pay a coupon. After 1 year, it will pay a coupon. And it says the bond is paying a coupon on May 15th. The bond is paying coupons on May 15th. Okay. So this is, let's just say May 15, 2024. May 15, 2025. May 15, 2026, and so on. Okay. Now what happens is, suppose I am an investor. Suppose I am an investor. Okay. And what do I do is, I think I want to sell my bond in the market. I want to sell my bond in the market on August 10th. I want to sell it on, I want to sell it, I want to sell it. When do I want to sell it? August 10 को I want to sell it out. ठीक है? I don't want to hold the bond. I just want to sell it. Okay? August 10th. So somewhere May 15 and August 10th would be somewhere here. Okay? August 10th would be somewhere here in between. August. ठीक है? Now, when I am selling the bond, okay, a person who is buying from August 10th, is he entitled, like a person who is, the person who is selling on August 10th, okay, tell me something. Suppose I am there and Shreyas sir is there. I have sold the bond on August 10th to Shreyas sir. I have sold that bond. ठीक है? तो ये जब May 15 को कूपन पेमेंट किसको जाएगा? द कंपनी विल पे द कूपन बॉन्ड टू whom? Will it pay to me or will it pay to Shreyas sir? Answer it to me, guys. I have sold a bond to Shreyas sir on August 10th. The company will pay the coupon payment. That is 4%. Will it pay to me? Will it pay to Shreyas sir? Think about it and tell me. It will pay it to Shreyas sir. It will pay it to Shreyas sir. But don't you think, guys, I am at least entitled to some coupon payment because I was holding the bond from May 15 to August 10th? Yes or no? I am entitled to at least some coupon payment because I was holding the bond from May 15 to August 10th. Yes or no? That is known as accrued interest. What is that known as? That is known as accrued interest. Am I clear? That amount which I am at least entitled to, that is known as accrued interest. Now, how do I calculate accrued interest is, let's just say the coupon payment was $4. Okay. We are assuming a face value of 100. Coupon payment is $4. तो $4 आपको मिलता है कितने डेज में? फर्स्ट वी आर कंसिडरिंग द 30/360 मेथड. $4 आपको मिलता है 360 डेज में. 360 डेज में. Okay. Now you will calculate from May 15 to August 10th. You will calculate what? From May 15. Okay. You will calculate from May 15 to August 10th. How many days have gone by? Okay. Now, if you are assuming 360 days, now every month you will consider maximum there is 30 days only. So make a month. So how many days of May are left? 15 days of May have gone by. Yes or no? 15 days of May gone by. Yes or no? 15 days of May gone by. May is done. June के 30 days. June के 30 days. July के 30 days. And August के 10 days. August के how much? 10 days. Yes. So total is 15 plus 10, 25 is 85. It is 85. So accrued interest is, अगर $4 आपको मिल रहा है 360 में, $4 आपको मिल रहा है 360 में, तो 85 days का कितना होगा? Cross multiply it and find it out. That is your accrued interest. Am I clear? Am I clear, guys? Okay. Simple. Now, actual by actual method is, you will not consider 360. you will consider 365 days. How much you will consider? 365 days. Okay, I will consider 365 days. And every month I will consider as if how many days are there in a month, na? So May, how many total days are there? January, February, March, April, May. May 31 days are there, right? May there are 31 days. So can I say instead of 15, I will have to make it 16. I will have to make it 16. January, February, March, April, May. June, how many days are there? How many days in June? 30. July, how many days? 31. Yes or no? July, 31. January, February, March, April. I do it out here. January, February, March, April, May, June, July, August. August may also 31 days. Yes. So what is the total of this? What is the total of this? What is the total of this? What is the total? Is it 85, 16 plus 30, 16 plus 88, na? How, one sec, let me, 16 plus 30 plus 31 plus 11. 88, na? 16 plus 30 plus 31. Oh, sorry, 10, yeah. My bad. This is 10 days only. This is 10 days only. So 87 days. Okay. So is $4 is for 365. So 87 ka kitna hoga? You will calculate it and you will get the actual by actual method. Accrued interest ka concept is clear. Is the concept of accrued interest clear, guys? Is the concept of accrued interest clear? Is the concept of accrued interest clear? Yes, Samiksha, my mistake. It is 10 days. August ke 10 days only remaining, right? Not 11, 10 only. ठीक है? Now, I want you to tell me, guys. This is, I think everyone should be knowing. If you all are giving your exam in August, everyone should be knowing this. How do you find? What is the method to find the price of a bond? Like, what do we call that method as? What is the method to find the price of a bond? What is the method to find the price of a bond? Present value of all future cash flows, yes or no? Present value of all future cash flows, yes or no, guys? Present value of all future cash flows, yes or no? DCF, right? Like you will find whatever cash flows that you are going to get in the future, you will find a present value for it. You will find a present value for it. Like whatever value that you are going to get in the future, whatever values that you are going to get in the future, okay, their present value that would be lower or higher. That will always be lower or higher. Suppose on May 15th, you are going to get 4. So present value will always be lower than 4 or higher than 4. Present value of this will always be lower, yes or no? Like 1 lakh rupees today and 1 lakh rupees after 1 year. 1 lakh rupees today and 1 lakh rupees after 1 year. It's not the same. The present value is always lower. Okay? Okay. Now, whenever bonds na, okay, you need to understand. Okay. Now let us once understand what is flat price and full price. What is flat price and full price? Okay. A bonds, this is a very important line. This is a very important. Bond prices, they are quoted without accrued interest. Bond prices, they are quoted without accrued interest. मतलब जो exchange पे जो bond price होगा ना, जो exchange पे बॉन्ड प्राइस होगा ना, that does not take into consideration accrued interest. That does not take into consideration accrued interest. ठीक है, that does not take into consideration accrued interest. Okay, so bond prices that are quoted without accrued interest, they are known as flat price. What are they known as? They are known as flat price. Just give me a moment, guys. Just give me a moment. ठीक है. So, like I said, the bond prices that are quoted on the exchange, that does not take into consideration accrued interest. That is known as a flat price, or that is known as a clean price. Okay. Now, a bond's full price, a bond's full price, which is known as a dirty price, is the sum of its flat price and the accrued interest. Is the sum of its flat price and the accrued interest. We will do one sum to help you quickly understand what is the difference in the two. Let me take you to this sum. ठीक है. A 5% bond, a 5%. What is this 5%, guys? What do you mean? Again, a quick revision question. What is this 5%? Is it the yield to maturity? Is it the coupon rate? Please, guys, get this answer right. Especially for students who have their exam in the next 15 days. This 5% is the coupon rate, or is it the yield to maturity? Okay, Krusha. This is the coupon rate. This is the coupon rate. 5% is the coupon rate. YTM is 4%. The bond is purchased. The bond makes coupon payments on June 15 and December 15. June 15 and December 15. So tell me something. Is it an annual bond, semi-annual bond, quarterly bond? Is it an annual bond, semi-annual bond, quarterly bond? Is it an annual bond, semi-annual bond, quarterly bond? Semi-annual bond. Now, if you want to calculate, okay, if you want to calculate the price of a bond, if you want to calculate the price of the bond, okay, for the bond is purchased and will settle on August 21, there will be 4 coupons remaining until maturity. There will be 4 coupons remaining until maturity. Okay, 4 coupons are remaining. Can you quickly calculate the price on your calculators first? Can you quickly calculate the price on your calculators first? N would be what? What would be N? How many coupons are remaining? How many coupons are remaining? How many coupons are remaining? 4. ठीक है, I by Y कितना लोगे? What would be I by Y? What would be I by Y? 4% है ना? What did I say about percentage? What did I say about percentage? सेमी एनुअल में परसेंटेज का क्या करोगे गाइस? सेमी एनुअल परसेंटेज का क्या करो? व्हाट विल यू डू अबाउट परसेंटेज? 4% डिवाइडेड बाय 2, yes or no? 4% divided by 2. Okay, now you will tell me, as sir, why did you not multiply this by 2? Yes or no? You will tell me, why did you not multiply this by 2? पहले तो आपने बोला कि मल्टीप्लाई भी करना है, राइट? आपको अगर मेच्योरिटी दिया होता ना, तब आप मल्टीप्लाई करते। आपको इधर स्ट्रेट बता दिया ना, हाउ मेनी कूपन्स आर लेफ्ट, यस और नो? अगर आपको मेच्योरिटी दिया हुआ था, देन यू वुड मल्टीप्लाई, बट हियर यू हैव बीन गिवन, राइट, हाउ मेनी कूपन्स आर रिमेनिंग, सो यू डू नॉट नीड टू मेक एन एडजस्टमेंट फॉर दैट। ठीक है, अगेन, अगर आपको बोलते हैं मेच्योरिटी इज 4 years, देन यू वुड मल्टीप्लाई इट बाय 2, बट हियर दे हैव डायरेक्टली स्टेटेड हाउ मेनी कूपन्स आर रिमेनिंग। एम आई क्लियर? एम आई क्लियर गाइस? ओके, coupon rate. What would be the coupon rate? What would be the coupon rate? Coupon rate is 5% divided by 2. ठीक है? Now since principal is not given, assume principal to be 100. Guys, remember something, whenever principal amount is not given, you will assume it to be either 1000, you will assume it to be either 100, whatever is convenient for you. I'm going to repeat it again. In your exams, whenever the principal amount is not given, assume it as 100 or assume it as 1000, whatever is convenient for you. Only use these two numbers, 100 or 1000. Okay, let's just assume principal is 100. Can you calculate the price of your price on the bond on your calculators and give me an answer to this? I'm giving you guys 2 minutes. Okay, so we get the answer as 101.904. Okay, we get the answer as 101.904. ठीक है, we get the answer as 101.904. Let me draw the timeline for you. 1 second. Let me first draw the timeline for you. 4 coupons are remaining. 1, 2, 3, 4. 4 coupons are remaining. Okay. 4 coupons are remaining. Okay. The bond is purchased on August 21. The bond is purchased on August 21. Okay. August के बाद it pays on December 15th. December 15th. June 15th. December 15th. June 15th. June 15th. Okay. It is paying 2.5. It is paying 2.5. I'm going to write it out here. 2.5, 2.5, 2.5, 2.5 plus principal amount 100. ओके, अब इसका जब हमने प्रेजेंट वैल्यू ऑफ ऑल फ्यूचर कैश फ्लो निकाला, इसका जब हमने निकाला, व्हाट डिड वी गेट द आंसर एज? What did we get the answer as? 101.904. We got the answer as 101 minus 101.904. ठीक है? Now, first step is we will calculate. What we will do is first step. One sec. There is, yeah. So step one, what did we do is we found out the price for the, we found the price for the bond. Okay. Now what you will do is, you will find the first step is you will find the accrued interest. First step is you find the accrued interest. Okay. Accrued interest using actual days. Huh? Accrued interest using actual days. Okay. Accrued interest कैसे कैलकुलेट करोगे? See, 2.5 is for 365. 2.5 is for 365. ठीक है? 2.5 is for 365 and accrued interest कैसे कैलकुलेट करोगे? इस August 21 के पहले कब दिया था बॉन्ड? कूपन पेमेंट कब आया था? August 21 के पहले कब आया था? which month में आया था accrued coupon payment? Can you tell me? Before August 21, the coupon was paid on which month? In which month was the coupon paid? It was paid in June. It was paid on June 15th, yes or no? It was paid on June 15th, yes or no? याद रखना गाइस, अक्रूड इंटरेस्ट के लिए ना ऑलवेज इसको, ये टाइमलाइन को थोड़ा पीछे लेके जाना, ठीक है? June 15 लिख लेता हूं इधर, June 15th, June 15th. Okay. So from June 15 to August 21, how many days using actual days? June के January, February, March, April, May, June. Can I say June के 15 days? Yes or no? June के 15, July के 31, August के 21. So what is the total? What is the total, guys? What is the total? Is it 67? 67 is the total, yes. Okay. And 2.5 is for 365 or 183? 2.5 is for 365 or 183 days, guys? 2.5 is for 365, 183. It's semi-annual, right? 2.5 is for 183 days. तो 67 days का कितना होगा? 67 days का कितना होगा? Can you calculate and quickly find it out? Can you calculate and quickly find it out? Krusha, during lecture you said there is some error, so we took. Nahi, Krusha, this is the correct one. I think after that I explained it correctly. This is the correct way to do it. Accrued interest का whenever you have the concept, ठीक है, the day you are purchasing ना, always remember आपको left hand side पे timeline लेके जाना है, ठीक है, to calculate accrued interest. ठीक है. Can you see, guys? Can you see accrued interest again? 2.5 multiply by 67 divided by 183, you get a 0.915. Clear है? You get it as 0.915. Clear है? Is this clear for everyone? Is this clear for everyone, guys? ठीक है? Now, how do you calculate the full price of a how do you calculate the full price of a bond? How do you calculate the full price of the bond? So I think this step is clear. Accrued interest ka 0.915 is clear. Okay. Now what do you do is how do you calculate the full price of a bond is, ठीक है, आपको yeah, how do you calculate the full price of a bond is, tell me something guys, tell me something. As you keep on what they have done is 1.02 raised to 67 divided by 183. How do I present value, ठीक है, I'll try to make it as easy as possible. Just give me a second. How do I try to make it as easy as possible is, एक काम करता हूँ, 4 days left to maturity, ठीक है. Let me take you to the Word document. Let me take you to the Word document first. I'll delete this. I'm gonna erase this. I'm gonna erase this. I'm gonna erase this. I'm gonna erase this. ठीक है. Now tell me something, guys. This how do you? I'm gonna erase this as well. ठीक है, ये आपका टाइमलाइन है, ये आपका टाइमलाइन है, and I'm gonna make this August 21 ना. Stay laser focused here. Okay, in the next 5 minutes, the whole concept is gonna be crystal clear. This is August. Can someone tell me this is August? Which date? August 21. This is August 21. This is August 21. This was June 15th. This was June 15th. When now when we were calculating the price on your calculators, when we were calculating the price, think about it and tell me clearly, okay? When we were calculating the price on the calculators, did we discount the cash flows? This cash flow, did we discount it up to here or did we discount it up till this one? What do you think? Did we find the price of the bond on June 15th or did we find the price of the bond on August 21? What do you think? Think about it and tell me. Again, when we found the price on the calculator, we discounted these cash flows. So did we discount it till August 21 or did we discount it till June 15th? What do you think? Krusha, lovely Krusha. I think you all are very well prepared for your fixed income. We discounted it till June 15th, right? Because हमने I/Y हमने पूरा सेमी एनुअल लिया था, करेक्ट है? We had considered semi annual, right? August 21 तो गलत हो जाता. Okay, so we discounted all the cash flows. Okay, easy way में लिखूं. What did we discount? Okay, now you tell me, what did we discount this by? What was the method? 1 plus what? What did we discount it by? 1 plus YTM, yes or no? 1 plus the YTM, yes or no? Can I say 2%? Can I say 2%? Why 2%? Because YTM was 4% here, right? YTM was 4% here. So we are taking it as 2, yes or no? Quickly. We are taking it as 2, yes. We are taking it as 2, yes or no? Take it. So 1 plus 2%. Okay. Now in this case, now your one more concept will be clear. Huh? 1 plus 2% raised to. How much will I raise to it by? Can you tell me how much will I raise to it by? What do you think? How much will I raise to it by? How much will I raise to it by? Krusha, I think you have given me the correct answer. Okay, now, guys, things will get very complicated when you have a semi-annual or quarterly bond. So how do you make things easy is? In a semi-annual bond, what do you do is, no, not Rahul, you are saying 0.5, but that is wrong. I will make it very easy. Okay. In a like whenever you have a semi-annual bond or a quarterly bond, make it into days. Make it into days. So 1 plus 2%. Now in the denominator, you will always have 183. How much will you have? 183. We are using actual by actual method, right? Always have 183 in the denominator. So even this would be 1 plus 2%. This would be again 1 plus 2%. Denominator में it will be 183 only. Denominator में it will be 183 only. अब न्यूमिनेटर में कितना आएगा? न्यूमिनेटर में कितना आएगा? जून 15 से दिसंबर 15 is how many days? जून 15 से दिसंबर 15 is how many days, guys? जून 15 से दिसंबर 15 is how many days? How many days? June 15 से December 15? Is it 183 days only? So it would be 183 by 183. It would be 183 by 183, which is 1. Am I clear? Am I clear, guys? Now June 15 से June 15 is how many days? From year to year is how many days? June June 15 से June 15 is how many days now here? Is it 180? Is it 183 plus 183 plus 183 plus 183? Yes or no? 183 plus 183 plus 183 plus 183. Yes or no, guys? So that is 732. That is 732. So 732 by 183 is how much? Is it 4? Yes or no? Is it 4? So basically, you have to raise this to 1. You have to raise this to 1. You have to raise this to 4. Am I clear? ये clear है सबको? ये clear है सबको? Okay. Now again, like just an example, forget the dates. Suppose it was a quarterly bond. Suppose it was a quarterly bond. Okay. In your numerator, you will always take it as, in your numerator, one sec. In your numerator, no matter what, you always take 90. How much will you take? 90. Am I clear? You will always take 90 in your denominator. Sorry. In your denominator, you will always take 90. Numerator, how do you calculate in your numerator is from the day you are calculating the present value to the coupon date. Am I clear? From the day you are calculating the present value to the coupon date. Am I clear? That is how you will realize आपको raise to कितना करना है. ठीक है? So in this case, guys, in this case, this was, I'm going to add a text here. This was 183 divided by 365. Okay. And in this case, and here the discounting was 732 divided by 365. ठीक है? आपको प्राइस क्या मिला था कैलकुलेटर्स पे? कैन यू गाइस क्विकली टेल मी व्हाट डिड यू फाइंड द प्राइस ऑफ द बॉन्ड एज? Once again, can you guys tell me what did you find the price of the bond as? What was the price of the bond? Was it 101.904? Was it 101.904? On your calculators, you had found out this price, yes or no? 101.904. ठीक है. नाउ अभी प्रेजेंट से फ्यूचर में जा रहे हो, प्रेजेंट से फ्यू जब फ्यूचर से प्रेजेंट में आ रहे हो, फ्रॉम फ्यूचर व्हेन यू आर कमिंग इनटू द प्रेजेंट, फ्यूचर वैल्यू इज ऑलवेज ग्रेटर देन द प्रेजेंट वैल्यू। अब सब प्रेजेंट से फ्यूचर में जाना है आपको, ठीक है। जून 15 से यू हैव टू गो टू ऑगस्ट 15 नाउ। जून 15 से वेयर डू यू हैव टू गो? यू हैव टू गो टू ऑगस्ट 15 नाउ। जून 15 से यू हैव टू गो टू ऑगस्ट 20, सॉरी, जून 15 से यू हैव टू गो टू ऑगस्ट 21 नाउ। So you will multiply this. You will multiply this 101.904 multiplied by the 1 plus YTM, that is 2%. न्यूमरेटर डिनोमिनेटर में कितना लोगे क्विकली? डिनोमिनेटर इट्स अ सेमी एनुअल बॉन्ड, डिनोमिनेटर में कितने डेज आएंगे इन अ सेमी एनुअल बॉन्ड? बाय एक्चुअल मेथड्स कितने डेज आएंगे इन द डिनोमिनेटर? हाउ मेनी डेज इन द डिनोमिनेटर गाइस? हाउ मेनी डेज इन द डिनोमिनेटर? 183 days in the denominator. 183 days in the denominator. Okay, here I made a mistake again. This is 183 only, yeah? Not 365. Denominator में 183 days. Okay, denominator में 183 days. हमेशा याद रखना डिनोमिनेटर में 183 days, ठीक है। अब न्यूमरेटर में कितना आएगा? फ्रॉम जून 15 टू ऑगस्ट 21 इज हाउ मेनी डेज यूजिंग एक्चुअल मेथड्स? तो 50 जनवरी फरवरी मार्च अप्रैल मई जून, जनवरी फरवरी मार्च अप्रैल मई जून। ओके, सो दैट इज 15 days ऑफ जून, जुलाई के 31, अगस्त के 21। ओके, सो इज इट 67? सो न्यूमरेटर में 67 आएगा। व्हेन यू कैलकुलेट दिस, व्हेन यू कैलकुलेट दिस, ओके, दिस इज वेयर you get the full price of the bond. Am I clear? This is where you get the full price of the bond. Am I clear? This is where you get the full price of the bond. Is that clear, guys? Is that clear? ठीक है। अब फुल प्राइस में से रिमेंबर वन थिंग, रिमेंबर वन थिंग, वेन एवर यू आर फाइंडिंग द प्राइस ऑन योर कैलकुलेटर, दैट इज नोन एज अ फुल प्राइस। क्या बोलेंगे उसको? क्या बोलेंगे उसको? What will we say? Whenever you are finding anything on the whenever you are finding the price of the bond on your calculators, that is known as full price. ठीक है, उसमें से accrued interest निकाल देना, you will get the flat price. Am I clear? I'm gonna repeat it again. I'm gonna repeat it again. Whenever you are finding the price on your calculators, that is known as a full price. उसमें से accrued interest निकाल देना, that will be known as a flat price. Clear है? क्लियर है सबको? एक what we will do is we'll do one more sum regarding this. We'll do one more sum so that things get more clear about this concept. एक काम करते हैं, where is full price, what is the bonds flat price? ठीक है, I think an investor 1,000 coupon, 1,000 par, or an investor paid a full price of 105.904 for 1 million face value. The purchase was accrued interest was 2. नहीं, ये तो बहुत easy है, direct है. How do you calculate the price of a bond is, ठीक है, एक काम करते हैं, इसका ना क्विकली व्हाट वी विल डू इज, इसका पहले एक टाइमलाइन बना देते हैं, सो दैट इट हेल्प्स अस इन अंडरस्टैंडिंग द कॉन्सेप्ट। इसका टाइमलाइन बनाएंगे, ठीक है। An analyst observes a 5 year. What is this 5 year? Is this maturity or is it saying how many coupons are left? Is this maturity or is it saying how many coupons are left? Quickly. Is this maturity or is it saying how many coupons are left? Is it maturity or is it saying how many coupons are left? Maturity. It is maturity. Rahul, no, I want you to understand how do you multiply. वो raise to कितना करना होता है ना? I want you to understand that. That is why we are doing this sum. ठीक है? This is the maturity. So जब timeline बनाऊंगा, ठीक है? I will say there are 10 coupons remaining. Am I clear? I will say there are 10 coupons remaining. 1, 2, 3, 4, 5, 6, 7, 8, 9 and 10. Clear है? This is clear. 10%. What is this 10%? Is it coupon rate or is it is it coupon rate or is it coupon rate or is it YTM? What is this 10%? Is this coupon rate or is it YTM? This is the coupon rate. This is the coupon rate. So every date pay, how much will I get? I will get 5% of 1,000. I will get 5% of 1,000. So here I will get 5, 5, 5, 5, 5, 5, 5, 5, 5, 5 plus I have considered face value as 100. Huh? I have considered face value as 100. Okay, plus 100. I will get this 5. Yeah, if face value is 1,000, so make it 50, 50, 50. 50, 50, 50, 50, 50, 50, and so on. ठीक है? I have considered face value. I had considered face value as 100. Face value is 1,000. Make it 50. Now, whenever you are finding the price on your calculator, उसको हम क्या बोलेंगे? फुल प्राइस. बट आपको मेथड भी समझना है कि हाउ आर वी डूइंग दैट. दिस 50 वी आर डिवाइडिंग इट बाय 1 प्लस YTM. 1 plus YTM. YTM is 15%, so we are going to take it 7.5. We are going to take it 7.5%. And what are we going to raise it by? What are we going to raise it by? ठीक है? We are going to raise it by semi-annual में. What are we going to raise it by? Semi-annual में what will come in the denominator? Semi-annual में, using actual by actual methods, what will come in the denominator? Semi-annual में how many days are there? In how many days are you getting the coupon? In how many days are you getting the coupon? 183. I will raise it by 183. अब न्यूमरेटर में कितना आएगा ना? इधर से इधर तक कितने डेज होंगे? इधर से इधर तक कितने डेज होंगे? Is it 183 only? Yes or no? Is it 183 only? Yes or no? So 183 by 183 is how much? 183 by 183 is how much? 1. Am I clear? Similarly, इसका करके बताओ. We will do for this one. We will do it for this one. लेजर से आपको इसका ढूंढना है. ये 50 को किससे डिवाइड करेंगे हम? 50 divided by 1 plus YTM, that is 7.5%. 7.5%. Raise it to. How many days are there in a semi-annual bond? Denominator में कितना आएगा? Just tell me denominator में कितना आएगा? Denominator में कितना आएगा? How many days will come in the denominator? 183. It will come 183. और न्यूमरेटर में कितना आएगा? इधर से इधर तक कितने डेज हुए? So this is 183. इधर 183, इधर 183 and इधर 183. Kashif, 7.5%, 15% divided by 2 na Kashif. So this will be 732 by 183. 732 by 183 is how much? 732 by 183 is how much? 732 by 183 is how much? 4, right? Is it 4? Is it 4? Perfect. Quickly, guys, quickly calculate the price of the bond on your calculators and quickly tell me what is the answer. Quickly calculate the price of this bond and tell me what is the answer. Quickly. Calculate the price of this bond and tell me what is the answer. Today, January, February, March, April, May, June. June, December. June, December. Is it 828.4, guys? Is it 828.4? Yes or no? Is it 828.4? 828.4? Yes. Is it 828.4? अभी ना आपको बोला गया है कि अभी आप प्राइस ढूंढो. Suppose I bought this bond at 828.4 and urgently I require funds. Urgently I require funds June 30, January, February, March, April, May, June, and December 31st. Okay. Suppose I urgently require funds in May on May 15th. May 15th. So how do I calculate the price of this bond here is I will have to multiply this by it to May 15th. Am I clear? Am I clear, guys? I will have to multiply that. So 828.4, instead of discounting, I'm going to multiply it by 1 plus YTM, that is 7.5%. अब वापस बताओ डिनोमिनेटर में कितने डेज आएंगे? How many days in a denominator in the semi-annual bond? How many days? How many days, guys? How many days? Is it going to be 183 days? Is it going to be 183 days? और एंड लेट्स जस्ट से मैंने मई 15 को बेच दिया. आई सोल्ड इट ऑन May 15th. So from year to year, I will calculate the number of days and I will keep it in the numerator. Am I clear? I will find the price of the bond in this way. फिर जो भी price of the bond आएगा, I am still doing it on the calculator, right? I am still doing it on the calculator, finding it out. Okay. Whatever price of the bond I am getting, that is known as the full price. That is known as a full price. I will subtract the accrued interest and I will get the flat price. Is the concept of full price, flat price and accrued interest crystal clear for everyone? Is it clear for everyone? I'm giving you guys 2 minutes. 2 minutes. Think about it. Any question regarding these concepts? Because trust me, guys, like this concept is always tested. Is more. There's a high chance this concept is tested in your exams. 2 minutes, le lo. Even the dumbest of questions, let me know so that I can help you out. Okay, so the last concept that we are going to do today is how do you calculate the price of a illiquid bond? How do you calculate the price of a illiquid bond? We use something as interpolation, which is also very, very, very simple, very, very, very easy. Okay, I'll give you a shortcut method only. How do you use interpolation method? Okay. Suppose there is a 4% annual pay A plus rated that has 3 years remaining to maturity. Okay. That has 3 years remaining to maturity. Now this bond is an illiquid bond. You want to find the price of this. The first thing you will make sure is whatever bonds you have been given in the question, the grade is the same. A rated, A plus rated, A plus rated, A plus rated. So if the grades are the same, you will make use of all these three bonds. इसमें से if the grade was different, if this was B plus, if this was B plus, you would not make a use of this bond. Am I clear, guys? Give me a yes or a no quickly. You will have to make sure whichever bonds you are using, the credit rating is the same. Is this clear? First step, is that clear? Okay, now what you will do is, so see, 5 years, 5 years we have been given twice. There's a 5 year and there's a 5 year we are given twice. So first step, you will find an average of this. 5.1%, 5.1% plus 5.3% plus 5.3% divided by 2. Average. Normal average, guys. Normal average. Okay. So your average is 5.2. Your average is 5.2%. Okay. Normal average. Okay. Next, what do you do is, अभी ना एक ascending order, you will have to find you will make an ascending order. You will make an ascending order. That is 2 years का YTM is 4.3. 2 years का YTM is 4.3. ठीक है. 3 years का YTM we are trying to find. 3 years YTM we are trying. So I'm going to make it as X. 3 years YTM we are trying to find. And 5 years का it is 5.2. 5.2%. 5 years. ठीक है. Make an ascending order like this. 2, 3, 5. Make an ascending order. ठीक है. Now step one is first you subtract this by this. मतलब how do you do is, oh, I'm so sorry. Okay. So how do you do is 3 minus 2. 3 minus 2 is 1. 1 year. X minus 4.3. X minus 4.3%. Okay. Now you subtract this one with the first one only. So 5 minus 2 is 3. And 5.2 minus 4.3 is 0.5.2% minus 4.3%. ठीक है. Cross multiply it, you will get the value of X. It is as simple as this. Nothing else to do. Nothing else to do. That's it. ठीक है. So the answer that you will get is around, the answer for this will be around, what will be the answer? Answer will be 4.6%. Am I clear? The answer will be 4.6%. Okay. This is how you find the price of a illiquid bond. This is how you find the price of a illiquid bond. Is the concept clear for everyone? I'm waiting for 1 minute. Let me know. ठीक है. Now, there is one more type of question which they have given to you. There is one more type of question which they have given to you. Okay? This is the concept you have to use the same. This is but a slightly tricky question. Okay? They are estimating, they want you to find the YTM of a A-rated bond. They want you to find the YTM of a A-rated bond. Okay? But they have only given you 5-year A-rated. They have only given you 5-year A-rated. Okay? What you are going to do is, this you guys only will first find it out. Okay? First, use the 4-year treasury bond. Use the 4-year treasury bond and use the 6-year US treasury bond and find, can you guys, using interpolation, can you guys find out 5-year treasury bond ka YTM kitna hoga? What should be the 5-year YTM? I'm giving you 2 minutes. Use interpolation only, the method that we used, and find out the 5-year ka YTM. Find out the 5-year का YTM. ठीक है? To make it more simpler, ascending order में लिख लो. Write it in ascending order. 4-year YTM is 1.48. 5-year YTM you are trying to find, and 6-year YTM is 2.15%. ठीक है? 4 का is 4.18%, 5-year is X, 6-year is 2.15. 2 minutes there. I'm giving you guys 2 minutes. Can you find out what would be 5-year YTM? Lovely, guys. By using interpolation, we got that the 5-year YTM was 1.815%. 1.815%. This 5-year 1.815% is the YTM of US Treasury. Is the YTM of US Treasury. ठीक है? 5-year A-rated coupon bond is 2.64. US government bond is offering a YTM of 1.815. 5-year corporate bond is offering a YTM of 2.64. So what is the additional YTM the corporate bond is offering? What is the additional YTM the corporate bond is offering? Can I say they are offering an additional of 2.64 minus 1.815, that is 0.8250%. Can I say 0.8250% additional? Yes or no? Yes or no, guys? 0.8250. The corporate is offering more. Yes or no? Yes. Similarly, if the 6-year US is offering 2.15, you will, this is known as a credit spread. What is it known as? Credit spread. Difference between government bond and a corporate bond. Okay? So similarly, agar 6-year US Treasury YTM is 2.15, you add the credit spread, you will get the 6-year corporate bond. Simple. So 2.15 plus 8.25 is 2.975, and that brings our end to our session for today. Okay? In the next session, what we are going to do is, we are going to look at, in a flow, we are going to look at modified duration. Sorry, first is Macaulay duration, modified duration, convexity. Okay. Uh, we are going to look at those concepts in a flow. Okay, that would be in the next session. And most of the students have a problem in understanding those concepts only. duration and convexity. I will try to make it as easy as possible. I'll try my level best. And best of luck for your preparation till now, guys. I hope you guys kill it. Let me did you guys enjoy the session for today? Yes, Rahul, credit spread is constant across maturity. Credit spread is constant across maturity, Rahul. Any more questions? Any more questions, guys? Any more questions? ठीक है. Also, if you guys have any question, please note down my work number as well. That is 8655785601. ठीक है. Till now, if you had any questions, till now, whatever concepts we have covered, if you guys are not able, if you guys have a problem in solving any question particularly, note down my work number. That is 8655785601. I will try my level best to solve it, to make it very easy for you. Okay. So that brings an end to for our session for today. Okay. Goodbye everyone. Take care. Have a lovely week and best of luck for your exams.